Good morning, my friends. Hello, good morning, and welcome to the Breakfast Club. My name's Darren, and we're here on a wonderful Wednesday, May the 8th. May the 8th today. Looking so excited today. Looking forward to this one today. Looks like a great day. Caught a nice good run last night, so quite happy with that. Anyway, we're anticipating that was the high yesterday. That's my 5 count Friday. I'll share that with you guys one day, all the different candle counting and stuff. But for now, let's get started. I got a bunch of things I got to do today too, as well. The charts are. Sorry, I'm gonna move my. I have to turn off the sound there so you guys don't listen to me popping my. Make sure we're live. I'm so excited today. It's going to be a great day. I feel it. Hopefully you guys had a great night last night. You got to get away from the charts. Just sit back, relax. I got to tell you, we got some guys on the Telegram channel there that are truly studying this stuff, and they're waiting for their setups, and they're executing their trade plan. And I'd love for them to come on today and just kind of talk about the patience. You know, you got Tommy. Oh, just checking, make sure everybody's on this morning. And Tommy's first to the door. Good morning, Tommy. And Talk, good morning. Christian or Tristan, thank you. Good morning. Victor, good morning. Buenos dias. Smash that like button, guys. Morning, Dave. I was just talking about you, Dave. Having the patience to wait for that execution, wait for that time. You see the setup coming. When you start to see your setup coming and you wait for that entry, you wait for it just to happen, man, that's discipline. That is patience. That's all the things you need to enter into the trade. The next part of it is, how long do you hold on for? Where do you exit for? How do you manage the back end of this trade, the front end of this trade? Yeah, it's kind of it's exciting. It's exciting. So it's great to see people just growing and waiting for that optimum time. I tell you, it's so good to see. So good to see. Yeah, I caught this really good long or short trade last night. I can't even remember where I entered in. It's way over here somewhere. Six right here. Ended up here and then rode it all the way down to here. So we're looking for a run all the way down into here today. I'm looking for a run right back into the mean threshold of this candle. And if we actually run through this, so I'm looking for a reversal today. And I'm also looking for, if I don't get the reversal, and this closed up while I was sleeping last night, so or earlier this morning, I've got another live trade on there going short for here, and I'm going to be watching it from the back end to see that if we get a reversal pattern happening at this point, or inside this imbalance. And if we don't get anything real significant happening in there at any specific time, remember time and price is important as well. And then I'm going to go for the bottom. So we're just going to manage this from the back end. So this one here, I guess the reversal would be right here. But I don't like this. I want to see something clean. I don't want to see this chop, chop, chop stuff going on here. But for now, this is in a bullish reversal until we start to see something on the opposite side that got taken out here. Reprice, rebalance, back inside. Yeah, we're really between these two candles here, so we'll have to wait. I'm still looking for more downside though. Take your fair value gaps, break it up into quarters, and you'll find that the midpoint is sitting right where that dotted line is there, which is lines up perfectly with the top of this candle and the bottom of that candle. Because then there's our imbalance. So I'm looking for this to continue going down further now. We have a nice little cam model entry setup coming. So this is one of those ones where you stay patient and you wait. This could be your cam model entry for a continuation on the downside. I want to see this get below this little fair value gap below here first. So good work, Dave. Simo doing well. Thomas, man, Thomas is growing like crazy. And Fernando, man, I love the way you guys are just hitting it, hitting the books, studying hard, looking for setups, asking questions, putting your charts up on the thing there on the Telegram, and you're sharing, man. You're asking questions. You're not afraid to make mistakes and learn, and we all get to celebrate your successes along the way. And it doesn't matter about the money. It doesn't matter about the money. The money will come. It's that setup. I'm waiting for your setup. And this is one of those kind of setups that happens so often that you don't have to wait days for your setup to happen. You just wait an hour. Somewhere along the line, every hour, you're going to get a high and a low forming, and there's a turn point there. So you get at least 2 times in an hour, you're going to find a high or a low setup or a swing point. Exciting. All right, let's get to it. 17 people in this morning. Did you see what I posted on Telegram yesterday? So lots of stuff you posted yesterday. What are you referring to? What are you referring to specifically? All right, let me go through all this stuff here. So looking for this weekly fair value gap to fill right here. Again, come back. We're just hitting off the midpoint of it, or the consequent encroachment of that weekly fair value gap. So look for, I'm looking for that to kind of let go and drive through. It would be nice to see this drive through this, take out that side and run back into the bottom of, or the top of this imbalance here. Because if we look at this comparatively, let's look at, see how NASDAQ is already into that fair value gap and already really close to the consequent encroachment. And then you look at ES, and it's already dug into the weekly consequent encroachment. This fair value gap here, it hasn't even come close to the midpoint yet. And Dow hasn't even come close. Oh, I don't know. Dow's not doing too bad when you consider this relatively, like there's that daily fair value gap that you focus on for each one. Is this one here. Then, you know, it's the space between these two candles. This one here. This one here. And this one here. So we're already through the fair value gap daily. Now that price imbalance is quite big in Dow Jones. It's a smaller one here, but it's further away. Smaller and getting closer. So ES, it looks like the stronger one out of the three right now. So if this one finally gives up the ghost and starts to run really well, you might actually catch yourself a nice little run here. But anyway, so we've got lots of potential places for reversals to happen. So we're just going to enjoy this run down, continue letting the trade continue on the downside, and we'll see what we get from that. Dow Jones. Okay, let's look at US dollar. It's going to be an exciting day. I can feel it. All right. So we're back up into the order block here. Right here into the breaker. We kind of hit it nicely yesterday. Now, if we get a retracement off of this and start to pull back down, we got to get through this fair value gap, because this is a reversal happening here, right? You see this little pocket of SIBI here. We went through it, our body traded through it. So what you want to see now is this come back to this and then push higher. If this continues to push higher, look for key levels like the top of the weekly fair value gap to see if there's any reversal, the mean threshold of that candle, see if there's any reversal. So there's two little sticks I'd had sitting up there last week. You can look for that to be a pivot point, and if we lose that on a close, then we're probably running for these highs, these equal highs up here, and we're going to push even higher yet. This is the reversal happening. So if we don't get an opportunity to get in here in a couple of days, you might see a big bold candle come back, tap these old highs, and continue pushing even higher still, if that the US economy keeps growing. So you got two things that are happening here. One is this is reversing, and two, you're really between this candle here and this one here. See how that reversal takes you down, and then we get another new reversal on the way up. So you're between this reversal and this reversal. So you're either going to come back up inside this. So I'm going to move this stick on this guy to right there. So that could be a high reversal, come back down, and you got to blow through this to continue back on the downside, and you got to get through that right there on the upside and through the obviously the main threshold of that candle to continue up, in my eyes. So I'm looking for a reverse back down into this fair value gap, find some support inside here and push higher. If we blow through the bottom half of that on a close today or tomorrow, we might push up a little higher today, and then tomorrow's Thursday reversal, get a reversal down into this level here, and then Friday either push through or we might have a continuation further higher. Yeah, love you, have a good day. I'll see you this afternoon. I get to go to the kids today, talk about hypnosis at the school. It's going to be funny. All these grade 5 kids asking a bunch of questions about hypnosis. It'll be fun. So anyway, that's the two spots I'm looking for in the dollar. So yes, I can argue both sides of it. So what do? You stay really tight in the lower time frames and you wait for you got a nice little reversal going on here. So right now you're looking for a return back up into premium area up here. So I am looking for more upside right now, continuation. We're still supporting more upside on the 1 minute at least. There's your reversal here for that low that we took. There's the reversal. You wait for a body to get above it. You get a body here. You come all the way down and fill it here. And you continue to the upside. So yeah, I'm still looking for more upside on that. If that puts us here where, if we fill that, at that fair value gap right there fills, that takes us right to the edge of this weekly fair value gap. So if we run all the way back up here, look for that, and then look for a reversal to happen here. And if it doesn't, it can keeps pushing through. Keep your eye on that level right there. So higher means lower on euro and cable and fiber. So we got cable. Is this cable? No, fiber. So we have the consequent encroachment of this SIBI that's been hit a couple of days ago, 3 days. Thursday was that? Wednesday, Tuesday, Monday, Friday. That was Friday's high. We get a reverse. Now we're coming back into, you want to see this fair value gap hold price. You can get a wick down into here as long as it closes above here. I'm okay with that. If we don't, if it closes below that, look for this swing to happen here. So this is one of those times where you look for your setup and you go, this setup looks like it's beginning to manifest. Like our buddy Dave there, he waits for these things like a predator. He's sitting there ready to pounce. So here's a daily. So we're sitting in your daily chart now, and we're looking at this, and I'm going, now there's an opportunity to go short if this closes below here and you come back into it. If you get a big bold candle go ripping through this, and we have a body close below this candle here, and you trade back into it, then you get short there. So this is a potential to continue going shorter. Know what I'm saying? Know what I'm saying? A little tiny fair value gap right there. Look at that. See that little guy right there? Reversal. Body trades below it. You come back well up and inside it here. And we'll continue on the downside. Like array down here. Like array down here. Pull your fib tool on this. And manage your fib tool. Or trade your PD arrays if you want. But I see more downside coming here. If you take out this candle's high on the upside on a close, then look at that as a potential reversal to go higher. Because you may just get a run back up into here, tap this candle here, and then continue on the downside. So when you see this, if this trades through this, you got to look at the range that you're in and say, am I in a discount portion? And yes, I can run through one, run through two, and get to this second one. If I close through the second one on a body and start pushing higher, then chances are we're going to go higher, which means ideally we think the American dollar is going to go back down again. Okay, so here's your reversal on the daily. So this is the kind of thing we're looking for over here. You see that there. We're looking for this rate, the same kind of thing on the opposite side as when we compare it to the cable. Here's your reversal. Body breaks above that high right there. You come back, you tap it, and you get long. That's what we're looking for right here. When the body gets below it, you come back, tap it anywhere inside there, and if the body closes above it, and you've got some support here with the fair value gap behind you. So if you drop down, come back up, and you tap the bottom of the fair value gap again, which is also the inside of that fair value gap on the opposite side, showing you the reversal, you can get short on that. So that's the ultimate one. So if you trade above that on a close on a day, then you're probably going to go longer. So that's where you close out at a break even. So the best one would be there if you get it. You've got 1, 2, 3 opportunities. Then you've got 4, 5 opportunities right here to get on that lowest leverage, obviously down here, in case that trades through that and takes you out. Your stop loss has to be here. So you have to look at your overall risk, 1, 2% of your account, whatever. Do you trust this as a reversal? That's up to you. Practice it enough and you'll start to see it. Okay, the US dollar. Canadian dollar. Well, we had this line up here as a place we wanted it to reach for, and it's hit it, and now we're having a slight reaction off of it, which is good. Now I'm looking for, what are we looking for here? So we got a reversal, and we have a reversal right there. So you see how the body traded below it here, then ran all the way back through the body of it here. So it was short, it was long. And that's the problem you run into when you're in these little, look at this, is like a daily tight range, right? You have this potential for it to run below it, above it, below it, above it, and there's only one fair value gap inside that range. That's the one that you got to pivot off of. And you have to literally change this direction on you over and over again. It's better when it's got two of them in a range than if it takes out the premium one. Then that gives you more certainty that you're going longer. So I got nothing on this one. If the American dollar continues to go higher, we might be looking for this high here. And then the next area of interest for me is right here. That mean threshold of that candle there. That pushes higher. So you're looking to take out these highs here and reach back into that order block. Body first. Put the body first. So that should take out the highs. And the wick, the mean threshold of that, or consequent encroachment of the wick. I always say mean threshold and consequent encroachment. You know what I mean. The midpoint. We have New Zealand dollar. Mean threshold, see that? Holds price. And we're back to this one between these two candles right now. So if we come back, we just tapped it. So if the American dollar goes higher, this should start pushing deeper into this small range here. You've got 1, 2, you want one of these to stay open as a breakaway gap. Ideally, you want it can come back, fill this, leave this open, and go higher. If it comes all the way back to the mean threshold of that candle, then you don't want to see that get taken on the downside. Now we've got the swing. So if you see this get taken here as a close on the daily, then we're looking for a deeper run down into the range. And that would be down into here. Draw that one out straight across, and you're probably looking at least the mean threshold. So if you close below this, come back up to it, you've got about a day or so to run back into this area here or here. And then you got to wait. So this may just run all the way back down here one more time, create another reversal that you can get in on to go higher. There's a reversal right here. Body trades above it. We come back inside it here perfectly, and then you start pushing higher. So again, the setup happens on pick a time frame, folks. Pick one that you like. Look for your setup. I just showed you two extremes, daily and 1 minute. They are happening on all time frames. Whatever one you're most comfortable with, find your setup in it. Look for precision down at the 1 minute, execute, move to the sidelines. Australian dollar. See we're already getting this swing point here. Did we take out those highs? We did. We took out those highs there. So now this becomes a valid swing point. Watch this here. If we close below this today, trade back up into this reversal Thursday, and then Friday continuation on the downside, you could be looking for a run deeper into this order block here. That would be my next level. So I'd watch for this to come back up inside here. Either the 1, 2, 3 entries. You got 3 different places you can enter in on that. You also have a fair value gap on the opposing side. So if you end up going into a longer range and we start eating through the mean threshold of this candle, look for a like array to like array. So down here, I would draw that range is where I'm aiming for down here below these lows. and back into this inversion here. Because this inversion here, you see that if you drew that out right now, that broke above it. New York open. Holy smokes, I'm a little slow today. Broke above that, never came back to it. So to me, if this retraces all the way back, look for that area right there. Let me get through some of these real quick. What do we got here? Japanese yen. So we did get a reaction off of the bottom of that fair value gap, which is good, off the blue line, which was good. Now you're looking for a run back into that range. Yeah, we got a reprice rebalance right here. So look for this is like a fair value gap. It's open. Look for that to run up to here. If we close above it, come back into it, look for continuation on the upside. That'll be your reversal right there. Also here as well. Oil, what's oil? Delicious oil. Yeah, I like, it's got some equal lows going on here, and I do like this as the premium array, discount array. I'm sticking with that idea right now. I still want to see this get down into here for oil. So you're looking at oil getting down to 74 bucks and dropping another $3. When we get here, how we react off of that will determine whether or not we're looking for another premium or discount to premium array. Because everybody's anticipating the oil's going to go, like I was talking about oil going up to $175 a barrel. Yeah, I want to see that. So if that happens, that's great. You know, I'm not saying he's wrong, but I'd love for him to be right, because if he is, and you can catch a nice reversal on a daily chart, sit back and wait for a mega trade to happen. Just this one alone, if you'd caught this back in February 8th, you would have caught, or February the 9th, 10th, or 12th, right there. The 12th and the 15th. You could have caught that all the way in and just rode that until you see a reversal pattern happening, which is right here. You saw that reversal, so you could have been on that like a whole month, catching that on a ride up for 75 to 81. So that's $6. That's huge. That's huge. All right, so let's go to, these are divvies, gold. Downside, look for gold to reach for here. I'll put this on the chart. Look for gold to reach 2309. We've got a body, we have a swing below this low. We have a fair value gap right here. We have bodies traded above it. If this closes below here, look for this. If it closes above here on the hourly, I'm on an hourly chart now. If that closes above there on the hourly, then look for a continuation. You're stuck inside a small range here. At least back up into here. It's a couple of bucks. I don't know how much that's worth it to you. Wait for a cleaner setup to happen. But to me, this is one that we've got a swing here. Broke above. We never got a chance to get back to the high of that candle, and we never got a chance to get back into the actual reversal itself. So to me, that's got more draw on the downside. And banks. Canadian banks, Bitcoin. The reversals, they're happening all over the place. Don't worry about those. Let's get back into consolidation. Now you want to see all these highs get taken out. You want to see that come back and take these. Take that fair value gap out there. This would be a CAM Model 3 entry. So, good morning, everyone. I made $700 on that run down this morning. Good for you, Tommy. Excellent work, buddy. But what you're supposed to say is, not that I made the money, that my setup happened perfectly. I got my setup. Don't focus on the money, my friend. I know it's important to you, but focus on the setup. I want to hear things like, Darren, it was perfect. The setup it was just like manifesting itself right in front of me. And then I saw the perfect entry. I took my entry. The stop loss was perfect. I didn't feel any stress. I wasn't worried about it because I trusted my setup. That's the kind of stuff I want to hear, because now I know you're really focusing on the entry and what you're looking for in the charts and not on snatching the $700. I know it's important for you. I'm not trying to belittle the fact that the $700 is huge for you, and I know it is, and it's awesome. I'm super happy for you for that. But keep focusing on the task, not the reward. The rewards will come. Just keep your task real. All right. Good morning, Tristan, Victor, it's Diaz. Smash the like button. Good morning. Dave Barry, thank you. Did you see what they posted yesterday? What my chart setup looks like while I'm trading at work? Oh yeah, I remember that one. Christoph, hi, how are you? Oil ready for a major turning point as nat gas. What is your reading on oil news at 1 o'clock? Thanks, like array to like array. Yes, indeed. I love it. All right, so yeah, oil looks like it's going to, I'd like to see this come down into here first. It just seems to me like this array, you never got an opportunity to get into this one until you got up here. And when you have a body break above this, right, this candle right here. Let me just make this bigger so you guys can see this. We got some time while we're waiting for this to happen. So let's look at oil for a second. You see this run down here, and you see this. Oh, you got one right here. I didn't see that guy there. You got this one here. The body breaks above it right there. Well, I guess you did get a chance to get in on oil. It opens here back in February. So February the 7th, if you knew this reversal pattern and you were, you're watching this for the setup on the daily chart back in November, if you're looking for this particular setup and you look for here and you see this setup right here, the body trades above it. The next day you start to buy oil long. And I'm not just going hindsight here. I show you this every single day on multiple different time frames. So I'm not just cherry picking a trade here. This happens all the time. So pick any one of the reversal spots. You'll see the same damn thing over here. You would have picked that back in December and rode it all the way up. You'd be having a good old time. Or just trading from PD array to PD array over here. You held that for a couple of months. You would have had a decent run. I'm just picking this one particular spot to give you an idea. Body trades above it right here. You trade back into it right there. You're starting to layer your buys. So if you had a stock that had oil in it, for example, that was heavily supported by oil prices, and you'd layer in a portion here, and a portion right at the bottom of that there, and your stop would sit down here. And when that same day it just took off, ran through this, you move your stop loss up to break even. As soon as it breaks through that fair value gap, you can start paying yourself there if you want. Just on this alone is $6.73 to 75. That's $2. A $2 run in oil, especially if you're in one of these charts, is huge. So if you just went, I'm just going to go from like array to like array, this one to this one, inside this small range, and you got right up to there, that's 76 bucks. You bought at 73, you sold at 76, so $2 3/4. But if you just left it and you say, I'm going to trade this now until I see a reversal. So let's just watch this for a reversal. We haven't breaking it, not taking it a high, not taking a high, finally taking a high here, no reversal. You continue to the upside. You finally take a high here. So you see this candle trades below. Then you come back up inside it. So you get out right there. Or you say, oh, wait a second, it's just closed above that level. So that tells me what? I'm going higher. So this one here, when it traded below it, you go, I'm out as soon as it comes back into that and touches it to go short again. I'm out right there. So you get out. And let's say you went short there. You changed your mind and said, oh, now I'm going short. So now you've been in this trade since this entry here with almost very little drawdown, 73 at February the 8th. You get out right here on this candle. When you notice that you've broke that swing point, you get out on that candle. It's 81. So there's $8 worth of running there. And then you got out on February or March 22nd. So you held that for over a month. You got out and then you went, I'm going short now. You just decided I'm going to short every time I see one of these things happen. I'm going to short it. And then all of a sudden you see it go open down here. You go, ooh, excellent. I'm in the money now. And then all of a sudden it just starts to reverse on you. Your stop loss is sitting here. It reverses on you and you go above and you go, crap, now I'm going to go long. I'm going to wait now because it's just broken above the high. Now you can play this high. I'm going to go long. I'm going to go short. I'm going to go long game over and over again. Or you just go, if I lose on one side and it's starting to do this, I'm going to wait for either this order block to get broken or this order block to get broken on the downside, retrace back to it, and then I'll get in. Otherwise, you're going to be going long, short, short, and then you'd be going short here. Then it opens, comes back up, and then trades through it, and you go, oh man. So now it finally breaks the top, comes back down into this candle. Now you can go along with a little more certainty that this banging around inside here. And yet, that's the problem when you have one small little range that you're in and you're going above it, below it, above and below it. You're in that little consolidation, and that's where you can get beat up in it in a daily chart. But again, if you watch this and you see a reversal happening here on the 1 minute chart, you'll start saying to yourself, okay, I don't want to be, I'm going to be careful of this, because if this breaks through here and we continue to do more upside, if I continue to break that on the 1 minute chart to the upside, I'm out because I'm starting to push higher. I'm not going to risk my daily stop loss. So you could manage this pretty easy inside here on a 1 minute chart if you were right or wrong. And I could do a video for you guys one day on that if you want, just to kind of break this down even further and play with it and say, okay, so let's say we do have this. Let's play the worst case scenario. How do we manage this on a 1 minute chart? So anyway, you continue, you get long right off of here, back into this. You would have bought the high or the midpoint of that wick. Continue on the upside. All the losses you would have taken inside here, you would have obviously made back. Then you see this reversal happening here. Body trades below it. You get back into the same shenanigans again and you go, I've closed below that. I'm getting out of my trade now, especially when it went all the way down here, came back up and closed there. You go, all right, I'm out. Oh no, it closed up here. Oh yeah, okay, so you wait for body to get below it. That actually opened below that candle. Came down, closed here, opened up here, come back, give you an opportunity to get out, and then go short there. Stop loss would go here. Watch this. Here, you come down, you see your fair value gap. Are you paying yourself there? If you're not, you just got your butt handed to you right there. It came back up and took you out. So is it perfect? No, but I guarantee you, you would have seen something on the 1 minute chart saying, that's coming from my stops. The moment it blew through that point right there, on a 1 minute chart, you would have seen it going, that's got no intentions of coming back down again. You wouldn't be seeing reversals going on there in a 1 minute chart. Anyway, so you wait for it to break below that low again. It breaks below the low. Then when it comes back into that one or that one, you can start getting back in it, which is this one here. And I don't know if that one gets hit. No. So that's more confirmation on the downside, because now it's an inversion. It's not just a reclaimed fair value gap. It now turns into an inversion. You find some support at that, comes back, keys off of it one more time to run lower. So if you caught this as a reversal, if you ignore this candle or this wick and you look at this as a reverse, we haven't really taken out a low though, unless you look at these. Body trades above, come back inside, come back to the fair value gap in a premium range, get out, pull your fib tool, take your 50, 62% fib tool, run. You get a swing here, body trades below it. You don't get an opportunity to get in on that. Carry on. That's a daily chart. So if this is the entry for the run down, we haven't got anything in here that really goes from one array to the other array other than this one here. And we've already blown through that. So the discount array is here, which you barely have got an opportunity to get in on. So I like this one here, and this one here is the downside objective for oil. Reversal here. Just bounce along the top of it. All of a sudden you finally dip into it right here. And now we're going along there. So this is the retracement, the big wick that we're looking for. Or not we're looking for. We wanted this to push down into here, and I wanted to see it get into here. So now what you're looking for is this wick to get challenged one more time and another big push down. So this could be just one of those really deep reversals back into the range. So if you pull this first one here, let's look at this first one. There's 75% retracement already. 79%. So you'd be bullish right here. You say, okay, so now we've come down to a pretty deep low, pretty close to that mean threshold, and I see a reversal. So if you're trailing this all the way down and you see this, this is the point where you go, ooh, now I've got a body that's traded above this. I'm going to get out now because I'm seeing a potential reversal. Comes back down, you tap it, and you're finding support above it. And then all of a sudden it goes, whoop, cleans out all the liquidity down here, comes back, fills this rest of your fair value gap below you. And there's a little tiny imbalance down here as well. Comes back, grabs that, and now we start to go fart to start to go higher. Start to go higher, fart to go higher. So now we're well on a run back up. So if this was just a wick down and now we're really hammering back up again, I missed this opportunity to get in on this morning. We got here at 9 o'clock, 8:30. I was just getting out of bed at this point. Would have been a nice time to see that. Mind you, you could have seen it right here, and I didn't. 9:30. I was too busy doing my yakking at that point, wasn't I? Hopefully one of you guys caught that. One of you ladies, one of you guys, hope you caught that on that reversal. How's everybody doing? Nat gas, yeah, I'm looking for nat gas. I want nat gas. I've got a lot of money in nat gas to go along. I really want nat gas to get its bum in gear, get up there. It's not really doing it, it's just kind of hovering right here in a consolidation, but nice opportunity to buy natural gas. Look where that sucker's, it's just got so much, it's got so much liquidity above the market right now. Even getting back into this old consolidation here, it's a nice interesting level. And this is a huge discount, right? And you look at it, $16, and it was like 160 some odd dollars was the high back here. This is 140, 138. Back there is like 165. So gas is way, way, way down. So if we get fuel prices or oil prices going up to 175 bucks a barrel, you watch this sucker just launch. So I got a big chunk of change sitting in this one, but that's just me. Back to the order block right here. 5-minute E-mini S&P. See how it reacts off of this now. Feel that fair value gap sitting right there. What's Michael going on about? So look at this reversal. Ooh, what one am I on there? That's NASDAQ. Look at that. Took out some highs. This could be that second run down on that wick. If not, it's going to push higher. We need a body to get below this. Lots of liquidity up here still. Russell caught a cam 2 model on the open for 14 handles. Nice setup as opening bodies respected the 1-minute fair value gap on the long displacement bar. Good for you, Russell. That's what I love hearing, man. That's music to my ears. That tells me that you were looking for a perfect setup. You found it. You took it. It delivered what you wanted. Perfect. Rinse and repeat, my friend Russell. Keep rinsing and repeating, my friend. Good for you. Morning, Deep. Derek. Good morning, buddy. Thanks for doing your little show this on the afternoon yesterday. Didn't really give us the kind of setups we're looking for, unfortunately, but I appreciate you taking your time to do that. It was awesome. And you guys should always take an advantage, take the advantage of having someone like Derek sharing his time with you. If you guys pop into the Telegram channel, he usually puts the link up there, so you can pop in and see the afternoon or the end of the day close. So when he's available, he will do an end of day close session with you guys and or with us. and you jump down, you jump in there. Not us as in like me participating. Occasionally I'll just sit there and give him a hard time, but he does a good show in the afternoon. If you guys are interested in that, pop into our Telegram channel, catch the link, and then join us over there in Skype. Tim's like, I'd like to retrace into that 1 hour unicorn. 1 hour. Oof, look at that right off the cam model there. 1 hour cam model. That stays open now. That would be delish. A full cam 2 would be a fill. And the cam 3 would be a revisit of this whole leg here, 50% of that whole leg. So it would be coming back to these old highs again. You want to see it kick off of a cam 1 here. Cam 2 would be like 50% of that range somewhere in here, which would be filling that fair value gap. So we'll watch to see if this fills this gap in here and we get a reaction off of that. Remember, if you're in a cam 2 model, you're 50%. If you have a body that closes above 50%, then chances are you're going to go higher. Look for this leg in here, 50% of that leg. And then we can start doing a 2.5. Ooh, yeah. Let me just move this out here. Now you got me thinking. If we get a retracement, there's 2.5 takes us to just below this low here. Two takes us below here, and 2.5 takes us down there. So I'm going to leave that on as a swing projection. The leg that takes out that high, project down. That's a downside objective today. What's Michael saying? Yeah. He's looking for this to create an inversion. Yeah, Michael's calling for this upside run here. As usual, the genius caught it. Good for him. And he was looking for the liquidity up here and got it. If we still have a little bit more to fill that fair value gap here in the CAM Model 2 entry, don't be fooled. I don't see anything in here yet. I want to see a nice big bold candle come ripping through this, create a fair value gap that we can get in on as a reversal right at 10 o'clock. And here's 10 o'clock coming in 20 seconds. So taking out this high here, taking out these highs, the liquidity up here, which it's already got there. So you want to see it clear up in here, fair value gap above you. And then look for that reversal. So 10 o'clock, here's 10 o'clock. Just catch a silver bullet here. Oh, Michael's out for the day. He says, did you see that in YouTube or Twitter? Yeah, right there. And the reversal, you're just, if you're managing this reversal right here at 8:30, if you've caught that 8:30 reversal and you're going long and you're managing it from the back end, you're still on this. You're still going higher. So yes, Michael, it was available on YouTube. We had it right here. We talked about it right here when it had happened right there. So yes, we were talking bullishness. So you wait for, you're continuing to ride this sucker up here on the way up. Now you've cleaned out some liquidity on the upside. Are you paying yourself if you've caught that long? Can you share Derek's channel? Yeah, he's got his link right there. It's not a channel really, just where I go to open up to share different times. It's a Skype home, day trading with DC. I think it's the name of it. I thought it was like Candle Lovers Anonymous or something like that. I thought that was the name of your thing, Derek. Hi, my name's Derek, and I love candles. That's how we start off our show every day. It's not really. I'm anticipating a down move. Yes, Chandra, yes, very much so. If I held at 1809 entry, that would have been 165 handles. This is where I may start to trade those specific setups with a runner. Not yet getting any signs. I totally agree with you, Russell. That's trying to stay, that's how you manage, when you manage this now, it's all about how do you manage that trade from the back end. You either pull your fib tool on the range, you either trade PD arrays that you're looking for to start paying yourself at, or you just let it go and manage it from the back end. And the first reversal you get, you take it out there. So pick one of those methods. My advice to you is pick one of those methods, play with it for a while. When you get comfortable with it, pick a different method and try that one and find out which one you like the most. Either way, you're going to benefit. Whether you just say, as soon as I get 10 above this old high, I'm out. You say, okay, great. Now I've got above this. If I get above this candle right here, in that little range, that's the breaker that starts the run down. If I get above that and trade back into it, I'll take it. So I trade back up, come back into it, actually overextend into it, back into that little fair value gap sitting right there. And then you continue higher. So it's one of those ones that if you miss this, look for the order block that starts the run. And as soon as that's taken on the upside, trade it, trade back to it, and then catch the run up higher. PD arrays, watching the specific PD arrays is far more challenging. You really have to understand your PD arrays if you want to start paying yourself at specific points on an array. If you pull the fib tool, it's the quickest, easiest way to catch a big run like this. For example, if you would have taken your fib tool from here, and I'm not trying to rub anything in here, Russell, it's just kind of giving you an idea. Don't sweat the fact that you had 165 handles went bye-bye there. That's not, it shouldn't be your issue. You caught the setup, man. The rest of it, you're finessing. So get excited about, there's 165 handles that's coming to me. It's coming to me, man. I can see it. I'm catching the entry. Now all of a sudden I'm just going to finesse the exit. So if you pull your fib tool in that range and you say, here's 50%, as soon as it hits 50%, I'm moving my stop loss to break even. So if you entered in here, my stop loss moves to break even. So there's no more stress. And I pay myself 50% of my trade off right there. And it's right at a level that it could retrace to and then leave. Or you look for, oh, here's a reversal here. We've taken this high out. If we get this on the downside taken, I'm not going to wait. I'll get into that one. That's it, managing two different ways. Let's stick to the first one. 50%. You hit 50%, take off half, pay yourself. As soon as you hit 60% right there, you move your stop loss to 50. So now all of your trade is in profit by 50. You've taken half of it off. You take another 10% off there. It does not come back and take you out. It runs all the way back up to 70%. You move to 62%. You pay yourself at 70, take another 10% off there. Then all of a sudden it goes, boop, hits 70%, or it comes down here, hits 75%. So you move to 70. This does not take you out. It probably came down first, then it went up, stopped right there. So you would not have been taken out because you were still sitting here. When that hit that, came back, stopped there. You're sitting right here. All of a sudden it launched and it went through here. So you're trailing your stop loss to here, to here. It went all the way up and then hit there, and then you pay yourself your last chunk there. And then it came down and would have either taken you out the rest of your piece out here, or you would have got big profit. So you would have moved from 156 to an entry down here at 82. So you would have been just shy of 80 handles there. So your 15 handles would have turned into 80 handles using that method. And you would have been trailing up, just giggling to yourself, because if it would have suddenly snapped back against you, it doesn't matter. You were in profit and you've been paying yourself on the way up. Or you're doing it method number 2. Which is as soon as it breaks above your high, comes back in, gives you your entry. You look for, pay yourself at fair value gap fill. 1, 2, 3 there. 1, 2, 3 here. 1, 2, 3 there. Paying yourself at fair value gaps or order blocks that start runs. Pay yourself at that point there. So you would have been in at the mean threshold there. You could take in that. And there's like multiple levels on there that you can aim for as well. Or you end up doing just the Michael thing and you say, or the other method is just managing the back end of it, which we talked about with the fail safe that Michael hasn't mentioned, but it's kind of something we added along the way for the fail safe. You could be managing the fail safe, and right now you're still in this trade with the stop loss sitting just below this candle right here, because there's no fair value gap sitting in here. So if you're paying yourself at the next high, pay yourself, and you're leaving a little piece on. Or you do the Michael thing and you say, as soon as that enters in there, I'm looking at this buy side liquidity up here, and that's where I'm aiming for. you get the full run up there and you take 100% off right there. But that's a level of understanding that is what we're all aspiring to get to. So there's 4 methods of managing your back end or your trade. So get excited, Russell. Get excited, my friend. You're catching the entry. A lot of people just say, I'd like to just get me in an entry, right? I'll settle for 15 handles. Now you got your next goal. Good for you, Russell. It's your Wicklever's delight. What an impulsive candle to short. I see an extreme buy side move. Chandra, where do you see an extreme buy side move? Tell me where you see that. You can't just make a big statement like that. You got to say, look at this specific level. Otherwise, you're guessing. You're saying I'm going down, I'm going long, and then if it goes down, you're right. But why do you say go down? Like, where's your proof? Give me your proof. Tell me exactly where you see it changing. What's the point at which it turns and gives you that theory? Otherwise, you're just guessing a direction, or it sounds like it's just guessing a direction. I'm not beating you up. I'm just saying, give me specifics. When I see it break this candle's low on the downside and a body hit it, I'm looking more bearish. Otherwise, I'm bullish still. And we're going to keep running up higher because I still see support. I don't see anything in here that's giving me any reason. Well, maybe in here. Let's rebalance here. What's this? Silver bullet time. Good. I want to see a body get above that. This area here is piquing my interest right now. You're in a consolidation here. You want to see something clean. You want to see this. See how he just goes down, just gets away from it, right? You don't have this big sloppy consolidation. The consolidation happens above the turn. Then you dip into the turn. That's what you want to see. Something, you don't want to see this consolidation. The consolidation going on here, and then all of a sudden a pop-up, run back up into that. Is that a New York open candle? Yeah, it's the start of the session candle right there. So that's going to me, that's where you want to reach for, is this New York open midnight candle. If we hit that and see a reaction off of that, we'll see how that goes. Right now, we've got a full fill of this fair value gap here. That's a CAM Model 2 entry. And it's a perfect entry right there. So it's great. We could see a wick up into here, body reversal, and your CAM 2 model's working great. If it does blow through this, look for this range here. And then if I take 50% of this, let's just move this down in here, look for a CAM Model 3. CAM Model 3 is right here. So it's literally up to the rejection block here. It's right on the rejection block. Okay. That's a short right there. I'm going to go short. 6. Why am I doing 6 handles again? I don't want to do 6. That's a lot of money to risk there. I'm taking off of this order block here. Just this imbalance. It's not a clean one, but if we get through this here, it'll be a little more cleaner. You don't want to see it just bounce off that and come back up again. Do, 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 do. Back up into the candle. So for me, if we've got this swing point here, if we break above here, that little fair value gap is of interest for me now. If we trade above that, then I'm wrong. We're going higher again. Yeah, not a good sign. So now you got to try and get yourself out of this. I don't want it to go any higher than that. It's going to come back up and take us out now. If it comes back into here, offset some losses if it comes back to here. I'm going to chase this all the way down here and take a smaller loss. Let's get back to this order block here. Body breaks above it, so we're looking for higher prices. That imbalance there and that little guy there found some support off of that. We didn't want to see that, but it happened. Then you get the reversal body opportunity to cut back some of your losses. That was $1,800 potential loss there. Saved $1,000 just coming back to there. So now we're going higher. That's how you can mitigate a little bit of loss. Should have paid myself down there. It wasn't until later I thought about, oh, I could have just dropped a thing in there, a buy order in there, but got to be quicker than that, man. So rejection block again. Now, if you have the wherewithal to catch this and say, okay, if this is the swing, I'm on the wrong side of this, I could just say, and I haven't got to that point inside my head yet, where you can just go, oh, I'm on the wrong side. So you start to sweat being on the wrong side of it instead of going, oh, okay, well, that's fine. I'm on the wrong side. I'll just get on the right side. So I'll just double down on the buy. That will close out the sell. As soon as it comes back to here, that will close that sell off at 6 and then put another 6 back in to go long. Aim for your first objective up there. That would offset the loss that you took there. Move to the sidelines and wait. Easy to say now. But that's a level that I will get to. I'm not concerned about that at all. That's future development. And that's just a matter of trusting this array, right? You trust that this swing point, as soon as it breaks that high, and we're talking about that, I didn't want to see it bounce off of here. And I thought, if it trades above here, that's not a good sign. Stop loss really got squeezed there, and it gave me an opportunity to take a chunk out. Then you go, okay, now I know I'm on the wrong side of this. I'm I gotta get long now. First objective, second objective, and then higher. We'll get there. I'm not worried about that. The fact that I see it now, first thing, you got to see it instead of getting frustrated by the loss. You got to be able to see it and go, okay, we managed to feel the adrenaline rush there, and then came back. Okay, chasing that down. And at any one of the points, I could have just popped back up and took me out, and then came all the way down here. So that's the risk you take, chasing it down. How far down do you chase it? Now, if you're looking for this for your silver bullet entry, you just got your butt handed to you as well as a silver bullet reversal. I'm still extreme buy side move. Want to retest the 143 to go long. Looks like a bear trap. Yes, it was a bear trap. I stepped into it. I stepped into the gopher hole. I'm recommending any buy just to observe. Hey D, are you still going with the seasonalities long term? Yeah. Like, I haven't seen right now, the seasonality this is continuing back up. And again, I'll put this back in here so you guys can see seasonal. And I'm just using this one chart. I'm sure there's millions of other charts out there. So here's the first week of May we're pushing up into. So next week we should see this retracement. Then a run back up into the third week or second week, which would be the 12th to the 18th. We should see run down into here. And then the third week up to here, fourth week down to here, and then run up into June. So I'm looking for this swing up and down this big range month, to be inside a range for the month, and then this take out the highs and push higher into June. And right now it's still kind of functioning. If we look at the daily chart here, look at that, and then look at this. May, up high, drop down. We have high on March, April. Here's May. The run down in May. Then the run up. Then the run up. Then the run down. We're looking for a run back down into here. And then we're looking for, and that run back down we're looking for is looking into look for a fair value gap, order block, whatever, like array to like array, whatever you're looking for inside that range here. And then once we hit this like array down here one more time, we're looking for a run back up to make some equal highs into June. And then how it acts from there, based on it being a year, like Michael says, it's a year for all these, or for the election. So the uncertainty of it and seasonal tendencies, this could be an opportunity for seasonal tendencies to not give us what we're looking for, when it could just start acting totally crazy and inappropriate. So that's the run up into like array. So I'm expecting to see this week. Then I'm expecting to see a run back down into discount array. That's that second half that we looked at. And then I'm looking for it to run back up and clean these old highs out here into June. So that's the seasonal tendency I'm looking for I think somebody gave me this idea the other day. Where is it? So you're kind of looking for a run up, run down here or here, and then run back up like this. So that's kind of like what I'd like to see is run, and this could be anywhere inside here. This piece could be all the way up into here. So anywhere inside that range there, and anywhere inside this range here, or this range here for the continuation. And also you'll have a couple of other little things to bounce off of here, but that's ideally what I'd like to see. Even if it just comes back into 50% of that range and then continues up, I'm all right. I just want to see a retracement happen off of this inversion here. I don't want to see it just keep running all the way through. I'd like to see a reversal back into the end of the month and then the push up. So sometime in the next, we're only in the first week, or this week, I guess the second week, you could consider this the second week, third, fourth, we have 5 weeks to trade this week or this month. So you've got, yeah, so this could be this continuation this week to early next week and then run down. Anyway, that's what I'm kind of looking for. Not that that's 100%, obviously. Like he says, seasonal tendencies. Who knows? See, that's the reversal. It caught me on the reversal, but at least I saw it. You see it. So you journal that and be excited about it. Don't beat yourself. I'm not going to beat myself up because I got taken here. I'm going to say, watch this. And these not clean reversals. Remember I was saying I like to see something that's really clean like this, not this choppy crap. So this to me is like the grass now. And somebody just said that's a bear trap. I like it. I like that idea. That sits well inside my head for an analogy or a metaphor, that this is the grass and you just went, whoop, you stuck your foot right in the bear trap and got nailed. But here's where price said, I'm going up here. I'm going long. I'm taking that low out. Here's the bear trap. You get one chance to pull your foot out before I take your leg off. I know it works well for a paramedic. The graphic works for me. So further upside, we're still upside bullish. I was bearish here. Now you're bullish. So if your initial thought was, oh, we're expecting this huge downward run, I was all for you here, except for this. This is the area that got me the reprice rebalance. There was no clean fair value gap there. See, I was hunting for something and put my foot in an old bear trap. So that's good. I'm going to be more cautious of these reprice rebalance things. So if you were still managing this from the back end and you're waiting for that reversal, a clean reversal like this, and not just one of these little reprice rebalance things, then this is just your confirmation for the upside that you're still going up higher and you're still managing this. And man, this could be crazy next price leg up stuff, right? Let's look at this. These are price legs. They're not trend lines, just so you know. My buddy David told me this technique, this little trick, back to zero. I was spending so much time trying to freaking get that thing to zero. And the older you get, the shakier your hands get, so you can't get that zero. Shift key works perfect. Thanks for that, David. So upside, now what's sitting up there around that level at 18,253? 18,253. Well, this old high sitting up here. We also have the run for that fair value gap above us now, 18,295. So this is all we needed just to get back into here and start pushing higher. Hot diggity damn. Anybody who would have caught that run this morning, if you're still keen enough to be in that, not get caught there. Even if you did get caught there and you could get back in there, go higher, you're back in a doozer. So look for that fair value gap above you again. That's our like array to like array we're still looking for on the daily. I'm looking for that level overall. I was kind of hoping we get down a little deeper though. But alas, we're still going higher. That's why you don't want to marry the trades, right? I was looking for this to keep going down today. And this reversal here, I clearly did not see that while I was yakking about my other stuff between 8:30 and, or from 7 till 10. I go through all these charts here. So I clearly missed this one till it was too late. But you still have an opportunity to get in, and I still didn't take it. Anyway, doesn't matter. I got caught in the bear trap. So we all got to learn something there. The bear trap. Good one, Russell. Here we go again with Mood being such a piece of work. Yeah, long since. It's been in line with euro and pound, but it's a struggle. Simple. Having to whittle away at $50 at a time. Birds chirp. SMT, 1 minute. Close new day opening gap. Where's the carrot? Where's the carrot? We might actually go with something new today. In celebration of Derek's new there's a movie out that's made about Derek. Did you guys all know about that? The new movie. It is this guy right here. Where is it? Sorry, Derek, I can't find him. Oh, there he is. The beekeeper. Derek is going to be a beekeeper. So he's taking the courses. He's getting himself a little hive. I think that's awesome. So in honor of our friend Derek, we have the bee. That's going to be our coming for some sweet honey. Watch here. %50 of that wick right here on the daily. Watch here. I'd like to see it get below this point here, come back up inside that. And then we're looking for a $10.30. See where that closes up. That's a good try. You troublemaker. Hey, this guy's teaching trend lines and he's calling it ICT stuff. The B might have to come down here. Indeedy do. That's coming down. At least to here. We'll see what that 7 seconds is. If we're just wicking down here to take this low and then run back up again. Watch where that closes. There you go. Back up. I'm going to go short on that. Alas, it could be my my nemesis. But that's the reversal and that's my setup. So that's what I'm going to take. And now if it closes above this, again, I'll get out because I'm on the wrong side of it. And I don't mind being wrong. And I don't mind being wrong in front of you guys either. So enjoy my shortcomings if I don't get this. If we get a body trade above here again, then I'm on the wrong side. And then Russell, just if this does take off, then we'll manage it with that back end trade, or we can manage it with a fib tool pull if you want. And I'm counter trending this, which may not be the wisest advice right now. So let's pull the fib tool from here and see what happens. So it's going to come down to our little bumblebee here. That mean threshold's nice if it holds. You can allow it to come all the way up into here. Mm-hmm. 8 seconds. We'll see where that goes. Wicks can do the damage. It's fine. And we're still below. Came right back to that order blocks wick. You can come down to my bumblebee now. He's a bit more of a Casanova than I am. But you look almost identical. You look like the beekeeper, but with more hair. When I think of bee, though, I think of getting stung, so I prefer the hair. Oh, yeah. I guess I could get, if we put the B up here, I could get stung. All right, I'll stick with the carrot. I'm going to put my carrot down here. Now, this is the stuff I don't want to see. All this, you want to see something clean, like we talked about here. When it comes back to it, you tap it, get the hell out of there. That's what you want to see. You don't want to see all this kind of waffling around here stuff. That stuff makes me nervous. But we'll let it sit there. It's on the reversal, so we've had a body trade below it. So far, the mean threshold is holding price. We haven't had anything trade above that mean threshold yet, or the consequent encroachment, as it were. Yeah, you're right. It might hit that midnight. Oh, yeah. I didn't see that. I was too busy reading that stuff over there. Yes, it closed. Yeah, it's going to take me out now. I was too busy looking away from the charts. As soon as it closed above right there, I'm on the wrong side. Take me out. That's two down today. Bear trap number 2. Yeah, you've got these equal highs sitting above us. Oh, crap. That's where you should get out right there. I'm the wrong side. Small loss. All right, so where are we heading for? Still counter trending it. Just give me my damn premium array already. Let's go. What's our high here? 18,295. 18,295. 18,295. Well, we're still up here yet. Trying to catch the reversal. It's like $2,000 of my 8K I made last night back. What did that? There's 8. Yeah, 8,000 last night, and I've already given back 1,100. Seeing this thing again here of this order block, but not having a body trade below it. You got a body taking that out. There's something to know here. You guys can kind of look at this and tell me what you guys think. When you have a fair value gap that is close to the candle that initiates the run up and creates the fair value gap, see, usually if you have like a reversal and like this, and the order block that initiates it is far away from it like this, versus right up snug tight to it like this. You see that? It's right on it right here. That instead of just looking for this, you have to look for this to close below it as well. This is where my eyes are kind of going right now, and I'm looking for, how come it just got taken on this one here? Why is it that I got took on that? And there was clearly more upside availability to me. What do I need to avoid this trap other than the fact that we got higher time frame objectives to aim for? Is there something in here with this order block being close to this that I have to have them both taken? So anyway, it's like a mental note I'm going to make in there, and I'm going to diary entry that because I want to go back and do some research on that. And something that you might want to look for as well, Dave and Thomas, if you, or Fernando, when you guys are looking for these reversals, look for this candle here in terms of your research and see if you guys see anything in there that you can find any validity to creating a new rule around something like this. When you got that order block so close to the reversal itself, instead of being far away from it like this. Because you have this one is the one that starts the whole run. You got this one, created it here. The body took above it. You came back inside it here, but you haven't taken it out yet. But you take, as soon as that one gets taken on the upside here with a body, you come back, tap it once, and then off to the races you go. Yeah, I'm going to look at that one and do a little bit more research on that. I don't know. What do you guys think? I would like to see it come down below the 1810. And the 5 minute going higher. But it did hit the midnight open, which is always, it always likes, yes. We didn't just hit it and reverse off of it. Would have been nice, but we didn't. We ran through it, came back, found some more support at it, keep pushing higher. So looking for that next price leg up. Right here at 18,252. And then obviously this old highs, and then finally the damn premium array. We've been calling for days now. See, this is kind of a good lesson to learn, you guys. And I don't mind sharing with you my shortcomings as well, is trying to catch these little counter trends. When you see the overall trend of the market moving in one direction, especially on the higher time frame markets, why wrestle it? That's trying to arm wrestle a reversal, just going by a simple pattern setup. And given I was definitely in that, and I was definitely in this one without, that wasn't strong conviction for me. And you've got this consolidation. So yeah, okay, lesson learned there. But this one here, yeah, there was a high probability there that might have been a reversal. But now I'm looking at this as looking for a rule around this. I'll go back through the charts and look for this being close to this and have to take the downside and see if it gets supported in this. So there's where my research is going to be for the next few days. But if the trend is upwards and the seasonal tendency is for us to come back up into this premium range, why wrestle it? Why wrestle against it trying to catch these little counter trends? Doesn't make sense. Doesn't make sense at all. Anyway, let's see if we get our rest of our price leg here. And no, you're not going to catch me if that reverses. I'm not going to bite 3 times. I've got both of my ankles have been broken here. See the difference with this one though is here. Is that a down close candle? Hang on a second. Oh, yeah, down close candles here. So if we lose this one on the downside and come back into it, this might be a reversal. But I'm not going to take that. I'm going to wait because we're so close to these highs here and so close to that premium array that I'm not going to muck around. What time is it? 8:52. It's clean, it's sharp, but I want to see a big closed candle get through this one and this one. One, two, you've got to get through 2. Body's closed above it already. Imbalance above you. Order block, valid, tap it. Continue higher, get through here. I'm thinking. This run up that we're seeing here, taking out the highs, the equal highs, or creating more equal highs to get taken out before June. More equal highs. So we're looking for these highs to either get taken out, looking for something to happen just above here, above these highs, either take them out or just hang in there tight. See, retail would think that's a nice little support level, come back into the range, then finally blow through it in June. Just out of curiosity. Good run today, Russell. Good observations. Good work, buddy. TP, if you're in our Telegram, pop it in there, man. You can do a voice. You can attach a voice to it with a picture as well. You can do a little video clip and just add it in there. If you can find a reason for that, that'd be great. I'd love to get your feedback, you guys, on why you think these reversals are failing. And my guess is it's this thing here. When you're that close, the candle that stimulates your run is that close. If you don't take the whole thing out on a run, then don't use just the body below it. It's got to take out that candle as well when you're that close. That's my idea. But I have nothing to really base that on until I can. And this one here I was searching for something in here. This reprice rebalance was curious. So again, the one that initiates this whole run up down in here, we did not break below it. And we did not get below something clean. So that's my research for me. So now we've had a run below. We popped below it. We popped above it. We came back into that imbalance perfectly. Now we've done a nice big clean run below it. Come back up and find some support at it. Now you want to see this thing get taken out on the downside. So now you're bearish inside this range. You're bearish now. Doesn't mean a big reversal, but it could end up being a big reversal. But here's where it's changed direction. Price is no longer going higher. We've just changed direction. We've got confirmation below lows. We've taken out this fair value gap. We've come back, found support at it. Now you want to see it drive through this candle here for further down inside this range here. So you got this old, pull your fib tool from here. So if you were short on this, this is the ironic thing about this, is what I was hoping for on the last bunch. Pay yourself there, move to break even. You could be all cocky here and say, oh yeah, I'm totally on that one. But see how it traded below, traded above? Which one do you take? I've been suckered in on a couple of those below. See how the body is, this thing is far enough away from this one now that we finally get something significant. Now we start to run through here. Now we got a body right below there. Look at that, literally opened, tapped on it, keeps coming. So there's your 50%. Move to break even, pay yourself half. Watch here. If you don't get your 62%, it's just come back into that order block there. No, I think you're still going to come down somewhere. So now that there's a little tiny swing here. I want something a little more significant for a continuation to the upside. So you look for these fair value gaps now as, are they pivotal spots? Now we're coming back off of here to go short all the way up into here. If we lose this one on the upside, then we've got between here and here. So now I'm looking for this to continue down on the downside. Watch here. If you get above that, then you're literally between those two then. If you paid yourself at 50, you're at break even. It's a zero stress trade. You've got 50% of your trade is off already using the fib tool. I still think this is going to be they're going to reach for this down here. And we're starting to come into 10 o'clock or 11 o'clock. So what do we see at 11 o'clock? 50% retracement back into the range of the day. 50 to 62% retracement is what we're looking for around 11 o'clock. And we're hitting 11 o'clock right now. Chandra said, I told you. Of course you told me, but you didn't give me any reason why. You didn't give me the order block. So as far as I'm concerned, it's guessing. No offense, but anybody can guess a direction and be right 50% of the time. You got to give me a reason. Just telling me it's going to go monumentously long that doesn't mean anything. But congratulations that whatever it was that you saw worked out well. Good for you. That's excellent. So now we've closed above this candle here. See that? Now you're going long inside this range. If you close above this one as well, that's a bullishness. So you've just got a retracement back to near 62% of that range. Now you're above that one, so now you're bullish again. Forget that candle. You're going up higher. See, that's why those are cleaner. At least you pay yourself 50% and you're broke even on the other half of your trade, counter trending something that is clearly going up higher. That's what I was looking for, to get something out of these little reversals. And I guess I could have right there taken this low, or I could have taken that right there. It didn't. And you could have taken something off here, but didn't. Reversal. Don't look at this one. Look at this one. Inside this range, you have a premium and a discount. It has to get below the discount one to continue on the downside. Coming back into it just to find support and go up higher is fine. But just because you traded below here, you say, okay, I'm going lower. Well, yeah, inside a range you are. So if you're looking for this one here now, I want to see it either close below it to get short again, or you're going off this, staying in our trend higher. You want to see that find support off of this and get back above here, because you're inside this small range now, bouncing off of premium and discount arrays. So keep your eye here. If we start trading below this low on a close, look at that, right on it. Now look for this fair value gap down here for more than 60, just over 62%. So now you're bearish again inside this range. Like array to like array down in here. Inside that range. Discount array. That should give us our 62% there now. Right on 62%. Coming into this range here now at 70%. So if you're using your fib tool, 50%, that would have come back and taken you out of break even anyway. using the fib tool objective. If you just left your stop loss up here, again, how you manage your fail-safe, if you have a fail-safe, and you're going short at that point for this reversal, you're obviously still in a trade. There's consequent encroachment. Now, if you really want to see it go, really start ripping back down here again, you want to get through this whole breaking structure to the downside now. Just come back to fill the fair value gap. I want to see that kick off of there and start running back up if you want to start running for higher prices again. So now you've got a swing point here. So look at this guy right there. $62% retracement back into the day. What would that give us? If I had a 50 to 62% retracement back into a 9:30, 11 o'clock. Bring us right back into here. So keep your eyes down here at 50% for this range reversal at 11 o'clock. So far, you've got your reversal going on here. So 50% will put us. And then we could get this fire. This will finally continue on after lunch. Once we get this reversal into here, and I run back at lunch, take us out here, or we come all the way down back into this range again, and we get this consolidation before taking that. Where are we at here? Clone. 50%. Puts us there. Support. Break market structure to the downside. Gonna go to the bathroom. What have we got? I want to see the next hourly candle cross the previous candle. When it crosses it, I'm sure it will shoot up. Okay, so you're saying the hourly candle you're saying I see the hourly low daily fair value gap where I say I am anticipating a lower price. I didn't want to see the next hourly candle cross the previous candle. When it crossed it, I was sure it would shoot up. I'm sorry, I don't understand what you're saying there. Crossed it. We could still come down into here, Chandra, for your reversal. If you're still looking for more upside, now that you've broken this to the upside on the hourly candle, if you come back inside this, retracing back into here or here, ideally, your perfect entry would be right there. But I think if you can get back to this fair value gap on the daily, or that's a daily inversion there, if you can get back to this to go long, I'd say, yeah, for sure longer. But this might be the 50 to 62% retracement we were talking about earlier, right? Into here, where 50% puts you right there. That 50% there puts you at 50% of your fair value gap. So if this retraces back into here, yeah, I'd say go longer. But I don't understand the logic to what you have written down there. Okay, so it looks like it's prepping for a lunchtime up and down action. Now it's taking support at the fair value gap. I'm anticipating the highest liquidity level to be captured. So you're finding support at this fair value gap right here. I don't see what you're looking at. Oh, yeah, in terms of the body of the candle getting through here, finding support at this and going higher. Yeah, I still see more downside here now. These are all finding support. So you're finding support at these. This is what I wanted down in here. But see how it's cleaner? See how this is messy? That one is researchable. I'm going to research that one. That wasn't a key level off of anything other than yeah, it didn't hit anything, any key level in here on the hourly. It just did a reversal. And now we've got further downside. So Chandra, keep your idea. I like your idea of going longer, but look for some level of support, because right now you're in a bearish candle and there's your bearish reversal. Back off of it and we're continuing down and you're finding levels of support. So you broke through here. Look for that candle there. You come back to it. Break down. You want to get through this candle here. Body gets through it. You come back, find support at it right there. This level here. Body breaks through it, comes back all the way inside it, wicks through, and then continues down. We take out the low, and now we're continuing down. This would have been a freaking... See, once bitten, twice shy. Third time, not a chance. And then the third time is the one we wanted for the reversal. But it's the 11 o'clock reversal into 50 to 62% of the range. So there's your 11 o'clock candle. So right there now, as you're entering into this, that's your reversal time, looking for another big run back up. So anywhere inside this candle, you want to look for either 1, 2, 3 potential entries, but your stop loss has to go way down here. So that's a huge, huge stop loss. It's longer than the distance you'd make to get your money back. So for here, if you're looking for your perfect entry, you wait for the reversal to happen in here.
if this hourly one is the one you're keying off of, look for your reversal in here to get your long, Chandra, because right now that is bearish. And you're keying off that level right there. So if this stops here now, breaks this on the upside with a nice clean break, come back inside this, then you can say, yep, you can start going higher. But wait till you get something clean. Because that's a key level you're looking for, right? So if that key level shows you on a 1 minute a reversal, then you can say, all right, I like it. Now I'm going to key in that and continue going back up for a big wick candle in here on an hourly. And it'd be great if the 50% doesn't get hit, then it just shows you there's even more strength to continue to the upside. Because don't forget, our overall bias is definitely for this guy up here. Came back, filled this one here. Wait for this to break to the upside. Took the short from 18,213. Good for you. Way to go, Jonas. 15 handles is enough for me. Good. Down is Michael 7. Down to Michael's 715 fair value gap 1 minute. This one here, the 815 one, or the 715 one over here. He was talking about this fair value gap over here. Yeah, you want to see a reversal. Now you got a break in market structure to the downside, but you're in a time where you can usually just get a 50 to 62% retracement into the range that was created between 9:30 and 11 o'clock or 10, 11, whatever that big dealing range is that Michael talks about. We can come back into that dealing range high, which is right there. You want to see this reverse here to go higher. If it's still going to come down, there's your 50%. And then 62%. I don't know where 62% is yet. But we're going to keep an eye on this level right here. Yeah, I agree with you, Chandra. Go on, come on our Telegram channel because I'd love to hear your perspective on that because I'm sure you got a really great idea. I'm just not picking up on it. And I don't want to, I'm not here to make you feel bad and I'm not here to challenge you. I need to see something clean. You know, if you're going to pick a direction off of a specific point and then commit to it. Like you've seen me commit 2 times to a trade and lose today. I don't care. I don't care. I'm wrong. And that, now I get to go back and go, it's feedback for me. Now I've got to go back and research that, an idea I have on why that failed. Not because it's these reversals fail, it's just there's obviously something in there that I need to work on, other than the clearly obvious that it was moving in a different direction on the higher time frame. Because I deal in a 1 minute chart, you can get thrown. I got thrown off the horse twice there, and I want to make sure I can know how to get back on the horse and how to avoid situations like that in the future, if there's something there to avoid. So yeah, commit to something. And if you're wrong, it's okay to be wrong. No, I'm not going to beat you up. No one's going to beat you up in here. It's a case of, oh, here's my theory. Throw it out there and we'll all work on it together and see if we can't figure out a solution for you. This is not a community where people all just come in and peacock and show how great they are. If you're right, you're right. If you're wrong, you're wrong. Just look at it as feedback and look for a way to improve your trading thing. That's the whole part of the community, is to improve our trading, not to see who's the greatest of all times, right? I don't care about that stuff. I don't care about being wrong in front of you guys. I don't. If it happens, it happens. I want to learn from it. And I'm willing to share that with you guys and show you where I'm wrong and where I think I'm going wrong. And looking for help. If you guys see that I'm doing something that I could look for that could improve my trading, then that's what the community's about. I'm not here to just give you guys all the ideas of like I'm the only one that's right here, and it's not true at all. I'm just the guy hosting the community. So go to the link above. The Telegram link is just in the section above us here. Go into the bio section above. Click on the link and you can join us in Telegram there for sure. This is a nice little reversal. Hey, market maker sell model. Smart money reversal, low risk sell. Accumulation, distribution. Really nice. So now you're still sitting in this, below this fair value gap here. And you've come back to the dealing range, like Michael talks about, the 9:30 to 10 o'clock half-hour dealing range. So if that's the dealer's range, we've come back to the top of the dealer's range. If that's the 10 o'clock, 10:04 right there. You've coming to the top of that. Are we going to react off of that now? Or are we going to start to come back up, consolidate, come back up into this area here, run back down further, clean this side out here, and we're looking for 62%. If it's 62, if you go beyond 62, then I think we're going to come back even with a deeper range. And then you got that whole range for the 12 o'clock. $62 puts you here. 70 puts a fill of this. $70 puts you right back into that 814 candle that Michael was talking about here. He wanted to see it go above that for higher prices. And if we get even deeper, then you go from like array to like array. Holy smokes, we're coming all the way back down to here. But hey, let's do one array at a time. That's going to be like a re-challenging this whole level again. This right here is 121. What's this one here? It's right near 62%. 50% is here. 50% of that VISI there puts you inside this guy right here. We're coming back up for that later. That'll be one of those after lunch specials. Again, one of those choppy, you want to see a nice clean reversal. Not this choppy crap that we got caught in here, which was a great time to get in on it. All right, I want to actually do a little screen capture of that one. I'm going to put that in my journal entry. These opportunities, I want to see. The 8th. Reversal. Reversal research. I get to mark that one up later. Look for 27, 28 reversal. This may be just the 27, 28, 30, 32. Chandra is welcome. You've now joined the group. Good for you. Welcome. I just see you signed on there. Good for you. Appreciate it. Now if current candle will cross the higher level, one more strong move up. Scary now. YouTube going higher. NQ, yes, not so. I'm bullish now. I'm sitting still. Still afternoon session, too many variables for me right now. NQ has 5-minute bullish. That would scare me going long. Yeah, we got to get above this candle here for bullishness for me. And we talked about this being a run up into here and then continuing on the downside. So far that's working out. We have not got a body trading above this. Wicks do the damage, return to order blocks. I want to see that start to push heavy through here now and dig down. And then you start to look for this guy right here. See how it's close? So the lesson that we learned from here, keep your eye on this piece here now. This is the lesson I was trying to learn here. And now we're going to apply it. We get to see it live now. See how it is applied. We have not traded a candle below here. We want to see a body get below here, not just a wick. I want to see a body get below that and then use that to either key off of here or that fair value gap for further downside now that we have a swing point. If we lose this to the upside, that's like the bear trap reversal. This was the bear trap we got caught on. Forget that one because that one was a idiot play. This one right here. This is the bear trap we stepped into for a short, but we did not take out that low. This is the bear trap you step into going short, or sorry, going long, this one going short. And we've got the same exact setup going on here where we have not broken this low here. And now this could just keep going higher. Now see how the body traded above it? Now we get a confirmation above this one, then more high side. Otherwise we're stuck in here, more consolidation. So I want to see this get above here. Now that we've broken that high, this wouldn't be a valid run for a short anyway. This one would, that one wouldn't. So these two are conflicting with one another. So who wins? Who knows? Go to your higher time frame if you want higher time frame confirmation. You were saying we're going longer now. Great. What are you keying off of? Are you keying off of a 5 minute? You've come all the way down to this. You filled a 5 minute and you're bouncing off of that. You want to see it get above here now on the 5 minute, get some support above that, which is the same area that we're looking for confirmation on the 1 minute. You're looking for confirmation on the 5 minute to continue higher. So you've just come all the way back down into this candle here, the range from here to here. That's a good optimum trade entry reversal on a 5 minute candle. You got a body just above it now. You want to come back in, find some support here, push higher. Otherwise, you're just inside this, consolidating inside here again. Testing. I think my last post got deleted. I was asking if you could share your minute, hour candle count. Something visual on Telegram. Remember Crazy Ivan's LOL? Oh, yeah. Yeah, maybe I'll just share it on there. I'll put the candle count in there so you guys get to see what it looks like, and then you guys can test it. I've been working on that thing for years, candle counting. I built bots around it, and now I just get to see more. Now that I've been playing on a 1 minute, I can see now, and I built that bot around, it went back in time, and it researched key levels, and came back and gave me a whole bunch of data, and then I crunched the numbers on a spreadsheet. And came up with some very interesting numbers. So I'm going to share them with you guys on Telegram. I have to put that down as on my to-do list. Where is it? I like my italicized pen. Something when you get... I have one of those italic pens. I really enjoy writing in English script or... Problem with fountain pens is you gotta I love fountain pens. when they work. Okay. Okay, Abs, I've got it in my little to-do list here. I'll go on Telegram and share it on there. I'll put some diagrams up there and I'll share them with you guys. See how we're just going sideways right now inside this. Slightly more bullish than bearish because, you know, we traded above. We're back inside here. but we're below that mean threshold. So you just sit here and waffle around side to side now. Some people here are lucky. I myself have been studying ICT concept for years now too. Don't mind sharing though, if it helps someone. Yeah, I love your that fair value gap, first order fair value gap. Very cool. Yeah, I don't mind sharing it. You know, when you look at something you've been studying, putting your heart and soul into, I can see why Michael's like, I'm not sharing this stuff with anybody. It's like, I don't care. If you guys can make, I think if you put more minds to it and you guys can make something of it, I've just definitely discovered something that is, it's beautiful, but you get so distracted by so many other things that you want to work on as well. And if you, one of you guys take up the mantle and start working with it, and you get to see that there's definitely something in there. And if that, we can find a way to tie that into our trading and make it so much more sweeter, I tell you, the level of precision just gets better and better. And Michael's talked about price, but he's never talked about it like this. And that's not to say that Michael hasn't discovered it. I'm sure he's got it as part of his agenda, his stuff that he's not sharing with us. I'm sure he's discovered more about time than he's really let on about. But I've discovered something about time and precision about specific minutes that we're expecting time, these key turns to happen. And I'll give you this one right now. 2. Look at the number at the bottom here, right down here. 2. I'll just kind of blast through them, write them down. Write these numbers down right now. If you got a piece of paper, write them down. I'll share them with you on a screen. But 00, 2, 7. And this is one we call the squabblers. Remember the squabblers? The 9, 10, 11, and 12. Squabblers. I'll explain it all later. Just write them down. 16, 17, 18, 21, 27, 30, 32, 38, 40, 42, 45, 48, 50, 52, 55, 58. Write those down. And if you missed it, go back and listen to them. I'm going to name them again. So here's an example. 14, there's 18, 4, 2, turn, 6, 7, reversal. 30, 31, 32, reversal. Over here, 38. Interesting. Over here, 52. Interesting. 38, 39, reversal. And they're within a minute or so. 36, 28, so 27, 28. 12, 2, when there's 1, 00 or 2, 7, 50. Are these piquing your interest? Anyway, so that's a sampler of my candle counting. And that's just the 1 minute chart. I've got it all the way up to daily charts, hourly charts. I got candle counts that are specific. So I hope you wrote those down. If you didn't, go back through the tape. Remember where we are. And 43 people got to learn that. Or other people who've got this far in the tape, if you have, in the show, and you're rewatching this later, you just got yourself a little gold mine of information right there. You got a little gold mine of information. I share my bullish idea on Telegram. Thank you very much, Chandra. I appreciate it. Thank you for popping in. Thank you for sharing that. I can't wait to see it. I got a bunch of things I got to do today. I got to get to a school, do some hypnosis stuff for the kids, teach them a little bit about what hypnosis is, and it's going to be really cute. Usually I go down there and do firefighting stuff. My wife gets me to come down there as a paramedic or a firefighter and talk about medical stuff during their medical or their biology section. And the kids ask me a whole bunch of questions. They all sit around this big circle and we ask me a bunch of paramedic stuff or firefighting stuff. I get to put on different hats. This time I get to put on my hypnosis hat because they're doing a little research on hypnosis. So we'll be doing that art class. See how we've got buy side, sell side, still running down into that whole consolidation. We haven't got a significant break above that yet. So you want to see something break above that and clear this candle out here. I'd like to see that. Come back, find some support at that candle or dip into here to go higher. Otherwise, still shorter. And again, see how there's just that one inside that small little range here. That's still one candle or one fair value gap. And you're either going above it, below it. You're going long, you're going short. You're going long, you're going short. So right now you're short, 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 short. One little reason, oh, maybe I'm going long. Nope, short, 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 short. And you're on the downside, so you're bearish again. So you got a body trade below it, you're bearish. And see that consequent encroachment level there seems to be really supporting more of a downside run right now than an upside run. So we have to get right through this, come back, find support at it. Ideally, you want to see something clean, not this choppy crap. You want to see something clean like this. Boom, come back up inside, leave it with some sense of certainty and adventure to run higher, right? That's what you want to see over here. And welcome to the lunch hour crap, right? Yes, daily is important at 1357, my friend. It is. That's why I was saying yesterday when I said 5, look at this. That's a 5-day right there. The 5th day of the month right there. And this 2-4, you hear me say 2-4 on a daily or a 3-5. So a 2-4 or a 3-5. So here's a 5 and here's the 2. That's the 2nd, May 2nd. And that's your 5th candle on the 7th. And the weekends don't count. It's totally cool, let me tell you. Now do that on the hourly. Go on the hourly, use the same numbers on the hourly. But stop at 24. Start again, stop at 24. And you'll see why I'm a big fan of that 11 o'clock reversal. Because back when I used to do an 18, when I used to do the 18, 17, 18, 16, 17 gives the high, 18, 19, 18 conflicts with 19, 18 is the reversal, 19 is the reversal, and then 21 sets the high or low of the day. See how you're still bearish? Nothing's really significantly broken that upside, so you're still bearish. So I like your bullish, you have your bullish idea, Chandra, but here, when you're down here in this 1 minute thing, you'll get confirmation whether your bullish idea is still supported or not. So then if your bullish idea is not supported and it does continue to come down, what else, where does it fail for you on the level that you're looking at? So if you're looking at your bullish idea, and sorry, I haven't seen it yet, but if you're finding your bullish idea on an hourly that's broken, where does it break? Where does it fail for you? And do you get confluence on a 1 minute chart that that's where it fails for you? For me, you have for your trading plan to be successful, you have to have a start, a finish, a fail point where you know it's going to go. If it goes wrong here, right, then I'm wrong. Like when I said, if it trades back through here, I'm wrong. I'm on the wrong side of this. So sure enough, it traded back through, came back. There was one point I got a chance to cut some of my losses. My stop loss was here. I got to cut back some of my loss here. I would have taken a huge hit there, and it was like an $800 versus $1,800 hit there because I know I'm on the wrong side. So that's the failing point for me. So that's when I know my trade is going to go wrong on the wrong side of it, when it breaks that. So when you have that as a fail point, it'll give you a little more confidence to go, okay, I'm wrong. I'm going to get taken out here, or I'm going to cut my trade out because it's going to come from my stop loss. Then you get a lot more of a robust trading plan, right? Where you see where it's going to fail. Otherwise, because how many times have you looked at your trade and then gone, oh man, that's going to trade against me. It's going to trade against me. My gut's telling me it's going to trade against me. It's because you recognize a pattern inside your unconscious mind that says, nope, I don't feel confident about that trade. Now, if you've ever said that to yourself in a trade, then that's the part you have to explore. That unconscious, I see something that I'm trying to send up to my conscious mind saying, that's not right. I don't see that. That's not going to happen. You're going to get your stop loss taken. That's where the doubts creep in, right? Because your unconscious sees something that you are not consciously aware of. That's why I love the whole hypnosis thing. The unconscious mind is a powerful thing, powerful tool. So have your fail safe. Don't just build a plan around, yeah, it's going here and it's going there. Where does it fail for you then? If it does fail, if you're looking to go higher and it's going lower, where does it fail for you? Or have you got a longer, is your stop loss way down here? You say, yeah, Darren, yeah, that's fine for me. I still expect this to go higher. I'd say, okay, I'll get on board with you when I see something down here that supports an upward run. And again, I'm playing only in a 1 minute chart here. You guys are talking on different level charts. That doesn't mean you're wrong. I just see right now, I don't see your trade panning out all the time. We're still finding bearishness inside our chart. Now we've bounced off of this like array to like array inside this big range here. See how this reversal here and that reversal there, we've come all the way down and we've tapped it. So like to like, you'll hear me say that yesterday, and you've just seen it again today, that one to that one. If we blow through this one, then where's the next reversal? Well, it's way down here. Now, are we going to make it down there? I don't know. It would have to get through the other side of this candle here on a close. And if it doesn't, great. Have we got anything in here? These are all reprice rebalances. And if this candle was all the way up to here, this would be that one Michael talked about in that video about how you have a wick down one side and a wick up the other side. So you rebalance one side, rebalance the other side real quick. You treat that as a fair value, yeah. So now we've run all the way back up. We're between here and here now, between that guy and that guy. We're either going to blow through him, come back up, find support, and continue pushing lower, or we're going to run back up through this guy, find some support above here to continue higher. I wouldn't support this as an upward trend yet until we break that candle's high. Because I've got no reversal here. I'm sure on a 30-second chart, you'll probably see something. Nope. I don't even see anything in there. Clean on a 30-second chart. Nope. Nice reaction off of it though. Like to like. Like you said about ICT being hesitant to share, some of this does take years of studying. Wish I could reach out to you on a separate forum, talk about other concepts. There's plenty of forums you can reach out to me, my friend. We can always do private chats. I'm all right for private chats. I respect some people. I talked to Mastered Trading. He had his own idea he shared with me, and I haven't shared it with anybody uh, because it's his private thing and it's his personal thing. So I'm not gonna share somebody's stuff. I respect that he came to me with an idea, and if it pans out for him, I try to understand his concept, which was really fascinating, and he uses it and he makes money at it. So that's not for me to teach his idea. That's his. He wanted me to keep it to myself, so I've kept it to myself. I'm not going to share it on here. If you want to learn anything from him, go to Mastered Trading, ask him, and maybe he'll share it with you. I'm sharing with you I love my reversals and I love my 1 minute chart and I love my inversions. You'll see me just repeat these over and over and over again. But for me, they're just bomber until I get caught in these little traps, which is great because I get to learn something. I get to go back in and dig some more stuff out of here. But I should really start to look at my Crazy Ivans. That's a total Crazy Ivan right there. Right? 30, there's your 31. And I got caught in a Crazy Ivan. Look at that, right to 36. Reversal. Ah, dang. I even got caught on my own Crazy Ivan abs. Look at that. It was coming up. Crazy Ivan looks back to see if I'm there, grabs me, and continues back up. Bottom of the hour. There's your Crazy Ivan. I got caught my own Crazy Ivan. Hot dang. Scrambled eggs with Derek. Yeah, you can DM me in Telegram there, Abs, and we can meet up on whatever platform you want. You just let me know whatever one works for you. I'll meet up with you and we can talk about some concepts. I've got man, I spend hundreds and hundreds of hours building bots using that MT5 platform. So many cool ideas I'd love to be able to put on that. If you could find somebody who could build a Pine script bot trading the same thing I've been showing you guys over and over and over again, this reversal, but it has to be able to reference old stuff. This, from a programming perspective, I understand, and I'm not a programmer by any stretch. It took me a long time to learn how to do just the MT5 programming stuff. This reversal and key levels they have to look for to get that. There's specific programming things you have to look for. It's not just simply find a reversal. When you say reversal, and you're making a lot of assumptions that you haven't built into a program. It doesn't know that assumption you just made based on stuff that's happened back here. You're looking at a whole chart and making your decision here, and that whole chart analysis you have to add into your programming, not just, oh, I see a reversal, I'm going to take it. I suppose you could. You could just trade every single reversal that you see. As soon as the candle breaks that high, comes back, taps it, You get out, put your stop loss down here, and it moves. As soon as you break that old high, move your stop loss up to break even, pay yourself at the high, and move up. There's some cool ideas. Anyway, if there's a programmer out there and you want to talk about you want to do some programming, you let me know. You want to build a Pine script bot, I'll be happy to spend some time with you. You got to share it though. What a mess, hey? Welcome to lunch hour. Yes, I never really listened to a lot of his his rants on Twitter. I never had Twitter set up properly to receive every message that he had, like notifications, because the notifications would be like doodaloo doodaloo doodaloo, and I was like, it's annoying me, but because I kept getting these bells all the time going off, people will respond to him, and before you know it, your phone's just constantly making that noise or vibrating all the time. And for me, with my nerves already redlining as it is, I didn't need that constant stimulus all the time. So I missed out on a lot of opportunities for his little nuggets that he gave out. But I think he's given more than enough in his core content and the content that he's created for charter members alone. Just those 12 trading plans alone, you can make your living off of that stuff. But the more we get our heads together, the more we start helping each other out here, the better we're all going to get. But pay it forward to people. If somebody teaches you something, pay it forward. If you learn something here, help somebody else out. Don't charge them for it. I'm not charging you guys for it. Help somebody out. See how coming back and finding support off this level now? Come back, find support. You want to start pushing through here, through the mean threshold. We're coming back to mean threshold of that candle, and it's just bouncing off there. So if you're looking at inside this range, you want to see this mean threshold give way and start pushing for this. This will be a nice pivotal level here. Now, if we can start driving through this, then you start getting excited, because if we start breaking that level, now you've got some really good market structure break to get down into this next little level down here. Otherwise, this could be just that lunch hour run for this real quick, for a quick liquidity run, 50%, 62%, run back up, and then take out these highs after lunch. So you're looking for a reversal. So Chandra, if you're looking for a long right now, wait for your setup. Wait for a setup. And this, if you're down on the 1 minute chart, you're looking for something clean like this happening to give you your run for higher prices. And if you don't get it and something bigger happens on a higher time frame, then take it on your higher time frame. But you want something clean on a 1 minute to say, now I'm going bullish. If I can maintain that at the level that you're looking for on a higher time frame, then you can get excited about it. This just gives you a level of precision at these key levels that we're looking for. It's like this morning we were saying we're looking for, this level, we're looking for that level, we're looking for this level right here, and it stopped right here. At no logical level did it actually hit anywhere inside there except for, I suppose, stand by. Michael's going to go, what are you talking about, Darren? It was perfect opportunity to look for this to this, and you look for this. So cool. Look at that. Just looking at that now. Came all the way down to 75%. did not close below the 50, came all the way down to the 75%, left 25% of that open, came all the way back up again. 50% of the wick. So look at this, like to, I wonder if that will do that. If I go here to here, no, didn't quite make it with 25% there. Yeah, I guess the levels you have to look for. So if you now take the, if we take this, here's what we're going to do. This is what we're going to do. We're going to add this. I like this. We get to learn something new. If every time we have a new fair value gap, we break it into quarters on the daily. And then we say we're looking for reversals to occur in any one of those 4 quarters. And if that quarter there coincides with, oops, that quarter there coincides with anything down here that gives us a level, which is right there. And we say we're at the next quarter. If we've if we see a reversal, so let's go back to here. Let's start this up here. Right here. So we're saying if we hit here, if I see a reversal, I'm going to take it. You say, okay, it broke below that low. Great. If we take this high out right here, then we're going higher. Oh, it didn't work. Okay, where's our next level? 25%. 25%'s in here. Okay, if we see this reverse here, we're going to go higher. Nope, 50%. Ah, crap. Okay, now 50% is around here somewhere. All right, so if we see this one take out, we're going to go higher. This is the one Michael ended up calling anyway at 814 because it's at the 50% of this. And he says if it takes it on the upside, then he knows that that 50% of that range has now been broken, come back up. Now we're going higher. We're not going to continue lower. So you get to 75% and you go, or 50% is here, 75% is right here. You say, oh, okay, now 75% creates this little range. You think, ooh, now we're at 75%. We may not get this whole fill. If we get a reversal, we'll take it. And there's your reversal, and you take it. And then Michael gets his confirmation above 50%, and away you go. Then you get that reversal back here. So you're coming up to this, and you're saying, if I see 50%, even when you hit that rejection block again, when you come back up at here, you say, do I get a break in market structure to the upside or downside yet? It's right here. Ah, this is the bear trap. Right off that rejection block. Legitimate bear trap. For me, it caught me. More research necessary. So if you do get taken out by that candle there, if your ideal entry is right there, your stop loss is here, it closed above, you go, oh, I'm on the wrong side. As soon as that opens, I'm out. So you really lost from there to there. That's all you lose instead of that whole range. So then you wait for the next setup. Here's the next one. It traded below. You think, great. Oh, it traded above. I'm out. It traded below. I'm in. If it comes back up to my order block, or the low of that, it doesn't. It actually keeps, it just keeps you out of it right there. So you run down, you think if it takes this body out with a body candle, and it didn't, it runs all the way back up into here, and then you see that little imbalance up there. It comes back up to the imbalance. That could have been your wiggle room. And off you go. So you say, okay, now I've got a body traded below this candle. If you're patient enough to wait now, and then it comes back up, I know you still don't get that. It's just outside of the range of perfect entries. But if you just looked at that one, you went, okay, now it's traded below that. Anytime it comes back into this with wiggle room up to this little imbalance, I'll take it short. Then you say, oh, look, I see a reversal here. If it clears this one on the top side, I've got a reversal. It may continue to the upside, and it did. So you go, crap, I'm on the wrong side again. Then all of a sudden it traded below it. And you go, now I'm down. If it takes this one out, I'm on the downside. If it comes back to it, find support, then you can get right there. You can get short. That would have been a bounce around mess there, but you finally got short. I think that's what I'm going to start doing now, looking for these, when you go down in those charts, to start looking for swing points at key levels on the chart. That's what I'm going to do. David, I'm a software engineer, and once I started learning how to trade, I was always curious about creating a Pine script. You're making me think about looking into it again. David, we need to have a little chat, man. I tell you, if we can get something, if you can do a Pine script bot that auto trades your account, like we were doing on MT5, beautiful. And if you start looking at, when I start adding the time component into it, it starts getting super sexy, man. Because if you can add time, and I don't have to worry about time, if you have a bot that constantly looks for 3, 2, 7, blah, 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 it finds those key levels and looks for them and sets those as highs, and they're built in. You never have to worry about it because the bot's always checking time, and it's checking its reference to what those numbers are. And when they're hit perfectly, then it triggers the algo to start, the little bot to start looking for a setup at that key level at time and price. Oh, David, we have some talking to do. We have some talking to do. If you can create that in Pine script, any one of you guys out there who can do that, I will sit down with you and work through a bot with you, and we'll test it. I got some great ideas for some bots that I'd love to see traded on TradingView. Oh, if we could get a Pine script bot, it'll be beautiful. Chandra does. Oh, she retracted the statement. Okay. I find that breaking fair value gaps into quarters is good for where the candle bodies closes, but a regular fib usually captures where the wick ends. When the 12 p.m. candle on the 1 minute chart crosses high of the 11:59 a.m. candle after taking out the low, I was bullish. The 12 p.m. candle, look for silver bullet setup. That's another app. That's another app I want. If you take the time, like you hear my alarms going off all the time. I have my alarms set for specific things. So I just type in my phone. So if I have this app idea that I set key times to remind me to look for some specific setups. And you program that into an app and have access to whatever chart you're on. I tell you, the app's a good idea as well. I got lots of cool ideas. When the 12 p.m. candle on the 1 minute chart crosses the high of the 11:59. So when the 12 crosses the high of the 11:59, I'm going to go long. Ooh, on a 1 minute chart? After taking out the low of the 11:59 candle. So it takes the low of the 11:59 candle, then takes the high of the 11:59 candle. And you were going to go long there? Off of here, off that order block to go long. Ah, okay, I see. You're in a consolidation there, right? You're still below this inversion. So you're still bearish off the inversion. So that 12 o'clock candle, if anything, wait for a silver bullet setup. That's what my alarm just was there. Look for a silver bullet 12 o'clock setup. Again, you're in a lunch hour now, right? So you're prone to go sideways. So here's your 50% of the range again. That's the equilibrium. And so you're really still, Chandra, between here and here. So when you're looking at this as an order block, you're just keying off of a really low level candle to go higher. Once you took that low, if I read your statement right, if this 1159 candle, if you took the low of it, then you went to the high of it and you want to trade off of it to go higher, that's just a regular order block entry. Not as super strong, not especially not in a consolidation like that. And you're right in the middle of the 50%. Like you're in the equilibrium of consolidation. See right there? You literally come off of equilibrium perfectly and you're looking to go long. So you can go high. When you're in the middle, you could pick either direction, right? If I read that wrong, I apologize. I probably got... So that's why I wouldn't look at that as a super strong run. And I don't need that to criticize. It's just, I'm just offering my opinion. Anybody else can chime in. As long as you're nice, be kind. Inside a consolidation, inside the equilibrium, for me, it wouldn't be a strong opportunity to go in either direction. I still rely on these inversions to provide me a level of support or resistance. So right now I'm still bearish as a result of trading below, come back inside, trade off of it again, multiple times. You're finding support at it, and now we're digging into the range between this one and this one, or the space between these two inversions. Sorry, this is not an inversion. I keep calling it an inversion. It's not. It's just a reclaimed fair value gap. It's reclaimed multiple times. If you trade through it and back to it, then it becomes inversion. So it's just reclaimed multiple times. I guess by definition, you could say that traded through it, traded back into it. Then it would become an inversion there. Yeah, I guess it would still be one there. But it looks like it's just reclaiming it from the other side. We had a small time that we traded above the consequent encroachment of that. Time is everything. I totally agree with you, Christopher. Or Christoph, I totally agree with you. Time is so crucial. I'll be very surprised if a timestamp is not passed into the parse. Yeah, see, on FX Streama, they had time, like it was just building blocks for building bots. You could build the blocks and you had so many different parameters you could set to get the candles or the bot to recognize specific things on candles. And we had some crazy stuff. I don't know if I could even show you in here some of the stuff I had. This will give you an idea. Some of the crazy stuff I was doing. You'd have these multiple levels of things they'd run through, and this was called pirates too. Like I had a whole bunch of different hedgehog, fair value gap hunter. I had a whole schwack of them I was building. But anyway, lots of interesting, lots of interesting things on building bots. They're fun. You know, you can spend so many hours building bots. I tell you, it can be crazy. Oops. So again, don't forget you want to get above this inversion and above that order block for me. Bitcoin, how's Bitcoin playing today? Nothing here. Right here. You see this guy right here for that swing? Body trades above it right there. You come back into it. Beautiful entries here. Pull your fib tool, run all the way back up inside this range. You can pull this range here from there to there or from the high to there. Pull the fib from here. %62%. Pay yourself there. Pay yourself there. If it comes back, take you out. Move to the sidelines. If you pull up here, you wait. You get a little bit of retracement. Doesn't matter. You're still in it. You hit 50%. Move your stop loss to break even. So where was it? Right here. You move to a stop loss to break even or just slightly into profit. You hit 62%. Now you move. As soon as you hit 50, you take 50% of your trade off. Move yourself to break even. 60, move right up to 50. So then it hits 60, you pay yourself there. Comes over, comes back, takes you out the rest of your trade there. And you caught the highest run and you paid yourself here, here, and it finally took you out at 50% right there from that huge trade up. And believe me, that is a massive run. Even at one handle, that's a nice huge chunk of profit on a reversal. You just using a fib tool, pull on a range. Now you imagine building a bot that recognizes a reversal, trades it, automatically pulls a fib tool for you, and manages your bot. So it manages this reversal, and then it pulls the fib tool automatically, and as soon as it gets to 50%, moves you to break even, hits 60, takes off half your trade at 50%, takes off a chunk at there, move your stop loss accordingly. You've got a bot that self-manages itself. You got a bot that runs completely autonomously. Reversal. Body breaks below it right there. You don't get a chance to get in on it though. Oh, dang, you say. So you wait for the order block. Bot has to recognize the order block as well. Body trades below the block, comes back up, dink, just grabs it. I think grabs it. No, it might be a little short. And then you capture a big run down there and you wait for the reversal to happen. It has to reference previous lows though. If the previous low is not taken, it doesn't look for, so it looks where you are relative to price action. If the low is not taken, you're still in the trade. Low is taken now. It looks for a reversal. Looks for a reversal. Looks for a reversal. Oh, found the reversal right there. Good. Now it starts to pull your fib tool on the range that it just went in from the high to the low. How's that? I'll give you a free bot. If you're a programmer, you just invented your own free bot, and you're going to make millions of dollars, and none of us will get the benefit of sharing it. How's that? It doesn't need to it doesn't need to learn to adapt to market conditions at all. It doesn't have to be AI related at all. It just needs to look for that specific setup. When the markets go into this kind of crap, it doesn't need to adapt to this at all. It just looks for specific parameters. And if those parameters are met, it trades. If it doesn't, it doesn't. If the parameters aren't found, it doesn't trade. And all this crap is avoided. It's just avoided. It's constantly looking for the lows. It's constantly making references all the time and looking for a setup. And if it doesn't see it, it doesn't take it. It doesn't see it, doesn't take it, doesn't see it, doesn't take it. So all this would have been ignored. It's looking for something nice and clean like that. There has to be zero, no adaptability. It doesn't have to adapt at all. The moment you build an adaptation into it, you build the chance of it's just going to screw up. And you have to have an AI that can do that. Not that AI wouldn't be a great idea if it could do it, but see how you've got this swing here above this high right there, body trade below it, came back into it right there. Oh no, it's just short of it. But we have a swing right there, right? The bot would be like, oh, sorry, I cannot give you a trade. Now you want to see it get through this guy here and through that order block. So you see a body get through here. 1, 2, there's a discount array, get through that one, and a body trade below here. So we don't get stuck in the bear trap again with the one that's really close to the order block that initiates the run. Trade below it, come back, and we'll see if we can find support at that to run this low. Also the mean threshold, keep that in mind of this candle right here. And we're just playing inside a range right now. And we're just playing, it's lunch hour. You're not going to trade this. We're just going to play looking at the range and looking how the candles are trading here. I got to get going soon anyway, so this has been super fun here this morning. I'm going to have to do some overnight trading and make back that 1,800 I lost there, or whatever it was. We had a good run last night, made lots of money, so I don't like the idea of giving back a third of my or a quarter of my profits. I know a guy that built algos, but the market is always changing. Yeah, but it's not. The markets may change, but the algorithm doesn't change. With everything that we've done, I have never referenced whatever's going on in the Middle East. I have never referenced anything about politics affecting these candles, ever. I've literally been here every day with you guys watching this, hyper focusing on candles, 1 minute candles. I don't care what's going on out there in the world. I just look at this. And yeah, that may influence the volatility of this, but it does not change how I look at these charts and how I look at price action. If you're in price action, you're in price action. Regardless of if the market's going crazy, that's great. You don't have to adapt to the market. You just have to stay on the horse. Does that make sense? All that stuff to me is noise. It's noise. Stay on the horse. Stay on the horse. Don't worry about that other stuff. Look at this. And I know that's a big, bold statement to make, and I know it probably flies in the face with a lot of what Michael's taught, but really, stay on the horse. If you can stay on the horse here all the time, if you get flipped off once an hour and you can stay on a horse, you're going to capture some big trades. And if you're capturing 15 handle trades at a time, I don't care. That's 15 handles in your pocket, man. But this is staying on the horse in price action. Don't care what's going on out there. It does not affect anything that we've done here this morning. And you may say, yeah, it did. It made it go up. Fine. We got on the horse, we went for a ride then. Then the horse changed directions and we saw the change in direction and you get to ride it all the way back down. Now I didn't, but we're staying on the horse. We're reading price action. That's what this whole community is about. Reading price action, not seeing if Darren makes millions of dollars trading the stuff he keeps talking about. It's up to you guys to take this information and use it to your benefit. What I do on that chart It's my business. Like, I don't ask you to show me what you do in yours. But if you learn how to just stay in price action here, those wonderful ideas you guys have for trading, this will help you get a little more precise in terms of when it's going to fail or when it's going to be supported. At least I think so. That's what the whole idea about the community is anyway. So you want to see this candle here now. We're back into that fair value gap here, and we've got this one sitting right here. We've got this one right here. We had a little slight bodies getting below it. We come back up inside this range. So you want to see this, find some support at this, climb up on top of it, and then climb up on top of this one. Body closed right on it. See that? Right on it. It closed on the one to go higher, and it closed on the one to go lower. So you're literally banging on it right now. Which direction do you want to go? I don't know, but right now we're still bearish, so we're still on the horse. And if that one closes above, then the horse just spun around and we're still on it. We're going to go long. And those are the key levels that we're looking for. And they're overlapping right now in a consolidation. Makes sense. I'm not aiming for up here. I'm not aiming for down here. I'm just inside this small little range right now in a premium portion that will either support price to go higher or support price to continue getting back into the lower half of that range again. That's all I'm at. It's just inside that price action. So now you got a body traded above it. So now you're bullish inside this one. So now you're literally back in this fair value gap again. And I'm pushing for mean threshold, which we've already gone through. You come back, find support. Now you want to push up higher into this fair value gap and hopefully push through. If not, you're coming back down into that smaller range again, this candle and that candle. There's the mean threshold. Push through here, aim for here. Take these lows and look for that range, because then you're in a bigger range again. Otherwise, you're in this small little guy right there and right there. And we're in a consolidation, so we're not really making any moves anywhere else other than just bouncing around in time inside these little tiny ranges. And see how we're compressing here? So mean threshold, if it bounces off of that, if it pushes through, look for a run below the lows, your equilibrium, your rejection and lows, and then look for that candle hasn't been traded to yet in terms of its mean threshold. You're inside the range, so you're in a premium to a discount. You need to get through that if you want your discount. Otherwise, you're just stuck between that guy and that guy. So now if it bumps off here and comes back into here, bump off that candle, then comes back down and revisits. So you're looking for premium, discount inside this small little itty bitty range like that. See how it's coming back up there? Bouncing off of here. Bodies are respecting it. You come back up to the order block. We're inside that little fair value gap right there. And then you're going to see it compress, compress, compress till it gets to the point where you go, all right, this candle is not valid yet. We haven't got above it. So you're between this candle and that candle still. You've come back up into premium. Look, if I pull my fib tool here, you'll see what I mean. From that candle's low, that candle's high. So you drop down into the discount range. Then you popped up into the premium range above 50%. Now you want to see this give way and start pushing down into a discount. So you're in the premium of the premium and the discount of the premium of that range, right? Watch when I pull from here to here. 25%. So if I pull to this guy again, quarters, premium, discount. You go up into the premium of the premium to the discount of the premium. Now you want to get into the discount of the discount because that hasn't been hit yet. You've got it all sitting just below here and up in here. So look at the overall strength. It looks like it's supporting more higher stuff, right? And this lower stuff hasn't been hit yet though. So it's building in sell side yet to be attacked. And you extrapolate this into a day chart, hourly chart, whatever you want. %, equilibrium here. It's stuck between these two. It's got to bust out of here. It's got to go higher, got to go lower. It's just going to keep making smaller candles that it can't do anything with. And then it's got to bust out of here. Come back up there and just fill the rest of that gap in right there. Done. Now, where are you going to go? You're all worked in here now. You're in the middle. You finish working it. You come back up to order block body, back to that inversion again. And we still have this dude down here, and we still have the mean threshold of that candle that has yet to be hit. I wouldn't want to have the bot trade for you as a base. I much rather it give you an alert. Yeah, then it's an indicator. It's not a bot. That's not, for me, I'm not a bot. You can build indicators all you want. And if it makes you, our objective was to find a bot that could trade the algo and stay out when it recognized the algo was setting these setups, like we're seeing, like I show you every day. If it finds those, it trades them, and it trades them automatically. And if they're, whether you're in here saying, yep, now I can trade it, or the bot's going, yep, there's a setup, trade it, it's irrelevant. It's then you've got to trust that the algorithm is doing what the algorithm is supposed to do. If you want to manually interject, that means you don't trust what the algorithm's doing. In other words, you don't trust your setups. You don't trust your PD arrays, right? Because you say it's randomness again, and it's not randomness. You either fully embrace it or you don't embrace it. It's either indicators or it's a bot that trades the trade, which is what I'm looking for, right? Because when you're looking for your setup, isn't that what you're doing? You're the bot. You look for your setup. You evaluate whether or not that setup is perfect for you based on fundamentals or whatever reason you do it with. See, it finally has to bust out of there, right? It's got to make a direction. The sell side hadn't been reached yet. And here you go. Now you're reaching for the sell side. So as much as I appreciate what you're saying, David, I do. But I thoroughly believe if you believe the algorithm is doing what the algorithm is, like Michael teaches, and these setups happen over and over and over again, build your bot to just look for that setup. And when it happens, you're in. There you go. There's your 50%. It's finally been hit from your 11 o'clock retracement. It took a long time to get there, but we're finally there. Welcome to the carrot. Lovely. Okay, now you're looking for 62%. Want to see this trade through here, come back, find some support at this. And look at the time. Crazy Ivan time. It's crazy Ivan time. Remember 27? 28, 29, 32, reversal 33, 21, 11, there's 12, 6 to 7, double zero, 47, 48, 50, 52. I tell you, people, time and price. You go back, and I built a bot that went back through time on the 1 minute chart, is back as far as back as data would take me. And I collected every high and low that formed. and I called it Voyager. Voyager 1, Voyager 2, a little Star Trek, back in time, Voyager. Target the EU met right into the 1 hour fair value gap. Once again, the rejection block was hit. The high was not lovely. And thanks, Darren. You're welcome, Derek. Wouldn't be active this afternoon as I guess Appalachian Trail this afternoon. Oh yeah, your Appalachian Trail people coming in. Well, that'd be exciting. You got to get a lot of information. Tell me all about that, man, because that'll be exciting to hear their father-son rendition of what their thing is for the trail, the Appalachian Trail. Do you trade NQ at night? Yes, I do. NQ at night. I prefer Bitcoin in the evening and Sundays. Sundays, I just mash Bitcoin away on a Saturday, Sunday. Like you'll hear David and Simo and Thomas and I in here, and Fernando smashing away on the Telegram channel, looking at Bitcoin at nighttime. In the Asian session, it tends to work good in the Asian session, and on the weekends when all the other markets are closed, Bitcoin's a fun one to just get your little. You need your candle high. You need to smell some scented candles. Get into Bitcoin, play there for a little while. I wouldn't buy Bitcoin, but to trade Bitcoin, it's kind of it's fun to trade right now just because it's giving you a lot of these switches back and forth. Like, look at these switches, man. They're just happening all the time. They're just switching up constantly back and forth. And now that's clean. For me, that's clean price. People may look at Bitcoin and say, it's all over the place. You see, you kidding me, man? It's giving you opportunities like crazy to get in on trades. If you wait for your setup, man, you can capitalize on quick, easy runs inside a range real quick. And they're just constantly doing this, and they're clean. They're not like, you look at the crap we're dealing with here. Look at this chop. And then you go over to Bitcoin and look at that. And that's a 1 minute chart as well. Do you see the chop going on there? Even through the lunch hour, it's not that bad compared to that. Eek. Which one would you rather play in? Which one seems to give a much better, cleaner setups? I'd take this. Like, look at this. Oh, man, right back into it, right there. Boom. And if you're just trading that on the next reversal, even if you traded it to here and it got a reversal, you wouldn't. You take the full range here, and they got two in a row, so you trade the second one, not the first one. There's a rule that I've created in here around this first one, second one. But anyway, you would have caught that full-on smash down, man. Ugh, beautiful. Body breaks below right here. See that? You trade back up into it right here. Chop, 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 chop. Finally get your run down into mean threshold of these two downward candles here. Add them together. Find support that. You want to see a body trade below this, not just stop on it like that. Trade below it if you want to keep coming down to a lower PD array. The first swing, you see that? This is the first swing. Oh no, maybe it's right here. Yeah, it's right there. Body trades above it, through it. A lot of resistance off of there. You expect that to give us some resistance to continue on the downside. You really have to push up through this mean threshold of that candle, get on top of that before you start. I go bullish again. Yam, what's Yammy doing? Jammy Yam. Small little imbalance. Body trades below it. You wick up and through it. Get short inside this range. Pull your fib tool. I bet you at 50% you could pay yourself. Yep. So if there's your imbalance, you trade through it, get it, 50% pay yourself. Is there a 62% in there? Look at that, right on 62. So 50%, you pay yourself half, take a chunk off there, and it comes back, takes you out there. So you still got the other 40% of your trade off below your entry. And a reversal there. Here's a reversal happening, taking out that low. There's a reversal right there. Ideal entries right here. If it fails, comes back to you, you can get out. Don't forget you've got some imbalances down here, so you may have to withstand a bigger dig down into here, but your ideal one would be here for a long. And you're trading from one array to the other array again. Or if you want to look at this range here, you're trading from here into here. There's no order block for you to key off of to keep going higher. It's all down candles. So you're just coming back into that range. So be careful that this isn't a, well, you'll know. If this is a next price leg down, you'll break this low here with a close. And if you can't get a chance to get on here, then usually you're trading back into this order block or 50% of that range. So if you're starting to eat through your areas where you'd start getting profitable. So if you get in here, you want to pay yourself here and here and here on the way up. And you see how they're already hitting these levels and you're not even in the trade yet. Ideally, you want to go boop, grab it, then start running to all these levels that you can get fed at. What's Dixie up to? It is pushing up into that level we talked about it this morning, so it's still in here. It's been sitting in there all day. Body's respecting it, did not take out that high and continue higher. It just came back up, filled the fair value gap. We reacted off of it. We're back to this fair value gap over here, subversion. Guy that built that algo was killing it on stocks like SPX. This year's been a hit or miss, it seems. 1 minute SMT long, short term SMT failed. When I say a base, I'm saying you should build it in baby steps. Oh yeah. Yeah, we used to call that, you're right, David. I had a couple of other buddies I used to kind of build a bot with. We'd say, let's build a bike first, and then we'll put the chrome on it later. We used to say, just putting the chrome on the car, build it on the bike. And we got to an F1 engine. I have a thing that can manage. I got a bot that manages your trade. Once you're in a trade, I got another bot built inside it that manages your trade on one side, and then the other bot finds your entry, and this one finds your exits, and it manages your exits. So one goes in, one goes, and one goes. This one manages your trade and manages your stop loss, and completely changes how you manage a stop loss. It does it all for you. But it does it MT5. It's absolute crap. I hate MT5. So manipulated. You look at TradingView and you look at how clean it is, and then you go over here and you go, what are you guys doing? And obviously there's levels of programming I'm not that good at, so I couldn't fully I was creating buttons that I would just go long short. I'd pay the trader, the werewolf, I had this werewolf bot, and as soon as I hit the button, I was like, oh, and it would take off a portion. It would scale out. I have a scale out button. I hit the button and it just scales me out every time I get to a certain point. I could manually override it, or I could have it scale out at specific levels. Like it would look for a specific high and then would scale you out. And I could set how much you would scale out at that level, and lots of cool stuff. But finally bringing it to fruition, I was like so close to the finish line, but suddenly went over into this whole trading view, and now that's where I am. This is where I am. So it'd be nice to continue on that quest here in something that seems a lot more cleaner. All right, so now we've got a body above here. See that? Got a swing below the lows. So consolidation, CAM 3 model right here. You want to get above this. I'll get right up in here now, come back, find a CAM model, model 1, model 2, and whatever the model 3 is for whatever the leg that takes that out, 50% of that. Go higher. And if you're not sure what a CAM model is, those are the ones that Michael have talked about in the past when you have consolidations and we have an impulse leg or displacement up. And then we come back, we usually visit the top of the fair value gap. That's a CAM model 1. It's called CAM model because Michael never gave it a name. I call it consolidation attack model. You attack this consolidation and then continue higher. So that's a CAM 1, and that can be from the wick to the body. CAM model 2 is right inside the middle or mid-range or consequent encroachment or equilibrium of the consolidation. And CAM model 3 is not a Michael one. It's more one I just added. But it's that price leg that takes out the consolidation and breaks to the upside. Take 50% of the leg that makes the consolidation. If you trade below it, you're going lower. If you trade to it and away from it, that's a CAM 3 model entry. And you can see that in our videos. In the video section, you'll see CAM model or consolidation attack model. It's a 30-minute video. You're welcome to watch that. In programming, the goal is to create an MVP, minimally variable product. The indicator would be a base. Okay, I see what you're saying. Yeah, actually, it's a good point. Now I'm thinking about it. Yeah, if you have an indicator that finds the spots, then you can use the indicator and build on the indicator to now start looking for. So if you have an alarm that goes off, I see what you're saying now. If you have an alarm that goes off for specific things that it finds, you know your indicator, your base of your bot is set to recognize the levels. Then you get it to act on that later on. So sorry, you're right, David. I agree. You see how I jump to conclusions? I'm only like 10 steps ahead. But yes, you're absolutely right. I fully agree with what you're saying. Look at that, right back to that. So if your stop loss was sitting here, entrance would be here. Not that I would be trading a consolidation, but looking at this entry right here, you've got a swing point here above a high. So do you want to be mucking around between this guy and that guy? So watch, if it trades back up to here, that's the consolidation discount premium. Then build it to trade for you after much question and answer testing. Yes, 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 I agree. That's why you're the programmer, David, because you can, someone like me, I'm the ideas guy. You'd be like, look, Darren, slow down. Let's just build the bike first. I'm like, yeah, but look at this fancy Schwen derailleur. This one looks so great. Let's add this. Wait, we don't even have wheels yet, Darren. I'd frustrate the crap out of you, David. Can we trade it tonight? What? Which one do you want to trade tonight? NQ? Tonight? Sure. If I'm around. Don't forget, I got a family, I got a wife here too that requires attention. You'll see Paul come in every once in a while, and Paul will say, look, I got some time away. I'm in for a few minutes. Oh, she's coming. I gotta go. So yeah, if I got time tonight, Tim, we'll sit down and talk about it. We keep trying to meet up, but it doesn't seem to work out. You got to get all your charts in place. If you have any questions, get them in place, and don't leave me hanging for a half an hour waiting while you go looking around for your stuff. You can find them on Waffle Hikes on YouTube. Oh, really? They got their own little YouTube channel. That's awesome. Hard to stay up. If I could be talking on Telegram or Zoom would be easier. Yeah. Hey, man, I'm there. You've seen me on there. I'm willing to do live chat with you anytime, but you got to be prepared. You got to have your stuff ready to go. Have your questions ready to go. You got to do the work. I'm not going to do it for you. TP 18193 clean level. 18193 is a clean level. Yeah, we got lots of and that's that New York Open midnight candle. Look at that, right at 194 there, perfectly. That's the opening, New York opening midnight candle. See how we've traded below it, tapped it. We're coming up close to it. We're still kind of heavy right now. We're back into this consolidation again here. And we broke below this little swing here. So bearishness inside, you want the body to get above it. You got above it, then you came back into it. Now you're sitting right on the very low of it. And you've got the reverse happening for a short. So now you're back into short inside this range. Yep, to fill this spot. If it pops below that, now you're double short inside here. Double short. That's not an ICT term. It's not even a Darrenism. It's just you're double short. I think 52.19 on SP as a target for PM session today. Pay the trader. Let me hear what you got to say there, my friend. Pay the trader says. Pay the trader says 52.19 is an upside objective. I like it for the after PM session. Yep. I like it too, man. Yeah, there's some nice equal highs up there, hey? Love it. Reversal. You need to see a reversal in the other way to support going up higher. A lot of consolidation, a lot of crap here to get through. Like array to like array, if we end up getting down into here, this slowly starts to work its way. Watch this area here and that little area right there and see what kind of support you get off those. I got nothing in here right now that support. Oh, that's a 5-minute chart. Let's go to a 1 minute. Not enough data to show the, oh, let me turn this one off. So that's what you want to see. Break through it, come back, find support at it right there like that. Look at that, beautiful. Now you go long. Premium array, premium array, discount array. We got in at the discount, you get out at the premium right there. That's your quick run. Inside a small range, grab your, if you're aiming for way up here, way too quick, man, stay inside the range that you're trading, take your money out, move to the sidelines and wait. Or you wait for that run up there, and all the time you keep getting these little reversals that say, now I'm going short. I'm going short inside this range here, back to this consolidation, or sorry, this inversion reversal. Again, see that right on the body, schmuck. You would have paid yourself at this premium array inside this range. You would have paid yourself there, came back, get to load on again, and aim for that again. It's like starting your trade all over again. And now, but you've got money in your pocket now. So if this trades against you, this will offset any losses that you may take if it trades below here. If you see a body trade below that, you get out. And the profit you made from running from here to here, because if you're aiming for way up there, you got greedy too quick inside a consolidation, man, just if you see an opportunity to make some money, grab it, take it. You wouldn't step over a $100 bill if it was standing in front of you. You bend down and pick it up. We used to pick up pennies and nickels. Find a penny, pick it up. All the day you'll have good luck. That was a penny. Are you going to step over a $100 bill? $20 bill right there just because you think there's more money further down the road? Stop and pick it up. Come back, load on your trade again. Now you're short from there. Run back up into premium. So now you're looking for short. You're between here and here now. Do you want to muck around in that? Stay on the horse. Stay in price action. If you get thrown off because you're not staring at your charts, then you're at the will of the market. You're at the will of the algo, and you go, I don't understand why it took me out there. Why has it come all the way back that far? Well, because it's traded up back into that range because we haven't found anything that's broken it to the upside yet with any significant candles. And if it does break, it turns around and breaks it back the other way. Then turns around and breaks it back the other way. But it doesn't break that high. It reverses again on you and comes back. So now you're still bearish inside this candle. Reversed back up to here. You took that high out. You're off this imbalance right here, and you're going shorter. You're staying on the horse. And we're trying to get that extra one we're talking about down here. Like array. Like array to like array. Oh, you hit it already here. Always a 5-minute chart, sorry. So like to like down in here. So anywhere from here. See it run through here one more time. Get into this level in here. Stay on the horse, people. Stay on the horse. I didn't take it to heart. I had chats with my product manager like this all the time. David, bless you. Thank you. Yeah, don't take anything by heart. I come with love and peace in my heart and a whole bunch of confusion in my head. I have an engineer friend who can't stand being around me because I am all over the place. I'm an ideas guy and I've got like 10 different projects, and he's like, for Christ's sake, focus on one. Just focus on one idea. He's an engineer. He'll go methodically plod along. And that's why I got into EMS. You know, you make a decision, you got to make a decision quick. Now, I don't have days and weeks and months to gather data. I got to make a decision now. You're dying. I'm not going to go, well, tell me, you're all blue-gray. I'm not going to act on that right now. You're blue-gray. What could that be? Has anybody approached you with a pillow while you're sleeping? No? Let me think. Blue. Have you let a lot of blueberries lately? No? What else could make somebody blue? Hell no, man. You got to act quick. That's why it's worked perfect for me. Firefighting, situations change, like on it, you see the color of the smoke will change and you go, I got to get the hell out of here now. Smoke's changing up color. Gray, brown, black, white. How the smoke moves. You got to act quick. You don't have time to go, what is it? That smoke's got a lot of particulate in it. I don't have time for that stuff. Boom! There we go. There we go. There's 62%. We have accomplished our objective of 62% retracement into the range. I am sure of it now. Yes, we called that from way back when. 62. Ba-boom! You love it. You gotta love it. All right. Now you want to see a kickoff of here. Now we've run these lows out. Now you want to look for that lovely little bit of a reversal, and it's not. See how it's just immediately rebalancing? So you're ripped down to 62. On that 5-minute candle, did it come back to our level? There you go. There's that first one. Right there to there. Premium, that's in the discount range. The first one that you feel, well, I guess 50% would have put us in here. You got one here. You got one. There's a lot of them on the 5-minute. So I'd love to see it dig down all the way down into this one here, this bottom one. But look at that reaction off of that. That's beautiful. That's a quick run on liquidity that was over here. And immediately rebalance. Now you want to see it get above this candle, find some support, get above here and here, find some support. Then when you finally break through all of this stuff here, now you've got breaking market structure to the upside. Now you got continuation back up into a higher range. At least that's how I think. Globex sessions. Does Derek trade Globex sessions? I don't know. Look at that. See body? Body gets above it right here. Come back, tap it once. Stay on the horse. We're going long. We're getting some leverage on top of this right here again. That little reversal. We've now swept it again, and now we're playing off of it one more time. So watch this candle. We're going to go long now. We're not going short right now. We're going long. We're staying on the horse. Stay on the horse. Giddy up. If it trades below here again, then you get short. Now you're unfortunately banging around off of this guy, but that's a linchpin right now. Find a support. Premium array. Inside that range. Watch that guy. You want to get through him on the upside, or her, if it's a her chart. You want to climb above that. Get up there. Come back, find some support. Oh, look at that. We're on the horse, people. We're on the horse. Body trades above order block. Trade back into it. Range. 1, 2, you hit it. Now let's see how we're reacting off of it. You want a body getting through there. You want to see some legs get up there. You don't want to see this wick happening. You want to see, come on, get up there. Mean threshold of that candle, you want to see it hold price in the middle of this fair value gap here. Inversion. Order block. High. Come on. Get up there. If it blasts through this, closes below it again, we have potentially more downside to go to. And you're still in your consolidation. And it's now 1 o'clock. Okay, so I'm going to split now because I've got a bunch of things I got to do. Got to get ready for these kidlets this afternoon. Got some shopping to do. It's Mother's Day's coming up. Don't forget to say hi to your mothers. Give them a hug. Give them a hug from me from Canada, saying thank you for making your kid, bringing them to the sessions. I love them all. I love all the moms out there. Just remember, without women, we would not be here. Nobody would be here. Nobody would be here. Love your mother. Give her a hug. Tell her how special she is. Amazing people. Amazing people. Anyway, I love you guys, and I will see you again tomorrow morning. That's Thursday. I'm not expecting anything on my candle count, nothing till next week. I'm expecting something delicious and nutritious next week. Tomorrow, potential reversal day. We might get another whipsaw down and another run back up into our highs. Don't see it. I think this is going to be our high set for the week. And I think we're going to run back into here again. As much as I want to see that get hit, maybe we can push up there. But a 7, 8 candle, 8 maybe. Maybe Friday reach that. Sometimes an 8 candle can do that. Sometimes a 7, but yeah, 9, 10 is more likely to make a high on a daily. Found support. Keep pushing. You got to get through here though. Otherwise, we're just inside this little consolidation. As soon as I hang up, it'll take off. Anyway, I hope you guys have an awesome day. I love you guys. Thank you so much for popping in. We have had, how many people we got in here now? Have we broke 700 yet? Ooh, we are two people away from 700 people in our community. So exciting. I love it. Welcome all 698 people. If you had a good time today, please hit the like button. Let me know how you appreciate what we're doing here. And if you're into checking it out, we're here every morning. Trading, trying to stay on the horse, stay inside price action. This is a price action study community. It's not about me making a trade. It's about staying in price action and how it helps you to improve your skills as a trader, to find your setups, to improve your confidence, to give you that ThetaWaveTrader. The ThetaWaveTrader is a mindset. It's feeling confident about your setup and reducing the cortisol that's in your body when you stress out on a trade. Once you get in a good trade, that little nervous excitement that you feel because you earned it, that's the kind of stuff you want. You don't want all the stress and the cortisol of your trade. And that's what the Theta Wave mindset's about. Developing that kind of trader you want to be so that it becomes, like Michael says, boring. And here's where you do it. You get into the charts and you mush around inside these 1-minute charts and you try to stay on the horse as long as you can. If you get thrown off, admit it, find out where you went wrong, jump back on the horse and start riding again. And it's spinning around like crazy trying to throw you off, and just say, nope, you're not going to throw me off. I'm expecting you to stay on. And if you go through here, I'm going to stay on you because I'm expecting you to change direction on me. Like this. Now if it closes below this, you're not going to throw me off. I'm going to stay on the horse. If you're just wicking back, that's fine. I'm looking for this order block to give way if I want to go higher. I want that one to hold price if I want to go lower. You're inside this one and this one now. They're overlapping. Got to take the low. Then look at the wick, divide the wick up, do all the other stuff Michael talks about. Now you're bearish. See that? Not running for up here. We're staying in the horse, staying on the horse, going short. Going long, going short. Anyway, thanks again for tuning in. I will see you guys tomorrow or tonight. I'll be on the charts probably later on this afternoon or this evening, looking at some Bitcoin or Thomas or David or Fernando or Simo or Lambo, any of those guys that are Derek, any of those guys that are on this afternoon that are still sharing charts, sharing pictures, practicing all the time. That's what that's why they're getting good. They're practicing all the time. And you're seeing them grow. And you too can grow. You too can hone your skills, get better and better at this stuff. You got a community of people here that are willing to help you out. If somebody's mean, they're gone. If somebody's rude, they're gone. We've already punted a couple of people The idiot that was in here the other day, no shirt, no shoes, no service, no class, no manners, that guy, gone. So learn. Come here to learn. We're here to help you, man. We want you to be the best you can be. Anyway, I wish you all the best. I will see you guys tomorrow on The Breakfast Club. My name's Darren Hancock, and thank you so much for tuning in. I will see you tomorrow. See ya.